ask questions throughout the course of today's presentation, by all means, fire away. That's kind of what we're here for. If I do not answer your question, again, if I do not answer your question in the midst of this presentation, I'll come back to it. I don't mind. I'll stay here as long as I have to answer some of the questions that do come up throughout this. I mean, I sit here and I usually trade throughout the course of the day. I'm on Mountain Standard Time right now, so markets close, 2 in the afternoon, leaves the afternoon kind of wide open. I love Pacific and Mountain Time. It's kind of nice. As I was saying, most of the year now we live in the U.S. Virgin Islands, and we're actually in Atlantic Standard Time. The market there doesn't close till like 5 in the afternoon. It's like a full day, man. With that, let's get started here. And again, I'll give you kind of a quick introduction for those of you that are brand new. So, Ultima Trades. This is 2021's high probability income generator. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. A quick risk disclosure. I was in the brokerage side of the business for a number of years. I am no longer in the brokerage side of the business, but I always throw this up here because I'm no longer a advisor or financial broker dealer. Figured I'd throw that up there. All right, this is why you're here today. So let's get right down to business because we have a tremendous amount to try to cover in a relatively short period of time. You're going to discover what Ultima Trades basically are and why they are absolutely idealistic for today's market environment. And I stress this to you because a lot of people, they listen to, I don't even know what an Ultima Trade is. Well, we're going to explain that in quite some detail. We're going to talk about a specific trading symbol that professionals use. In fact, it's essential that we actually talk about this right now because it's absolutely huge in terms of being in play. We're also going to talk about where you can find edge as a retail trader. And some of you are maybe not familiar with the term edge. I'm going to make you familiar with the term edge and what edge happens to be. We're also going to talk a lot about high probability trades and kind of reaping the benefits of high probability trades while kind of mitigating risk on the backside of it. Like, how do you not take large losses? And finally, we're going to talk about specific candidates. What makes a viable candidate? What doesn't? What's a recipe for disaster? And what's a home run in terms of these Ultima Trades? So that is specifically, kind of the itinerary today. And some of this sounds maybe a little bit cryptic. It is. I mean, these notes, like, you might not know what an Ultima Trade happens to be. We're going to explain that. We'll talk about specific symbols here. We also, I encourage you, like, listen, I do this during the trading session because we will bring up the markets a number of times live. This is a ripping rally today. We're going to bring up the markets live. When I say live, like, it's one of the reasons I like to do this during the trading session is it's so much more dynamic when I do this, when the market's open, and I'll be able to reference some live trades, take a couple of questions from you, maybe even trade what you guys want in here. So by all means, sky's the limit for what we're going to do today. A few housekeeping items. There's an indicator that I reference just constantly, incessantly, if you will. That indicator is called the expected move indicator. And we're going to provide you a free copy of the expected move indicator, which I'll show you here momentarily. We'll give you a copy of the expected move indicator. It's a $500 value right at the end of this webcast. So stay with me right until the end today, and we will absolutely give you the code for the expected move indicator. It is phenomenal. Again, I use this every single trading session. I mean, there's not a day that goes by that I don't reference what the expected move happens to be. And some of you are like, I don't even know what an expected move is. It's okay. Again, we're going to reference that a number of times today as well. Again, stay with me right to the end of the webcast, and I will give you a link where you can go grab the expected move indicator. It's an indicator that has literally changed the way we view markets. Now, people listen, this happens to be a screenshot. I much prefer, to use, if you will, live markets and live market conditions. One of the reasons that, again, we're kind of hosting this during the trading day. People are like, oh, I got to do this on a Sunday night. I can do this, on a Wednesday afternoon. No, I like to actually trade live during these presentations. So by all means, if you take a look at the expected move indicator, what these lines represent, it actually represents a little bit about the options marketplace. Now, you may or may not be familiar with options. That's okay. But when you take a look at these three lines, that is what this middle line here, that's the start of the week. the upper edge and the lower edge of the expected move. That's how the option marketplace prices risk for the week ahead. You're like, well, how does that work? Okay. When the market closes on a Friday afternoon, the option prices for the next week actually give you bands of how far we're implied to move. People look at like things like MACDs and the Fibonacci's and Bollinger Bands. I'm not anti-charts, but you have to realize that all of your technical analysis is like running, at 90 miles an hour, looking through a rear view mirror. It's crazy, or driving, forward with looking through a rear view mirror. It's all on previous data. The expected move indicator is actually using the options market, okay, to handicap what the move is going to be. So if you will, there are billions of dollars traded, okay, and those billions of dollars are all traded specifically at these levels. And that's why it's such a, an important indication. Again, I'll give you a link to that right at the end of this webcast. Next, a few housekeeping items. Listen, what we're going to cover today is a skill set. And I'm going to tell you right now, I do a lot of educating here. And during these portions of education, I'm telling you, shut the door, turn off Skype chat, whatever else might be distracting you. By the way, if you see me looking around a little bit here, simply because I have multiple monitors set up, and the monitor where the presentation is running is right below this camera. I have another monitor over here where I'm actually, capable of reading, chat and everything, and the broadcast. And on the far left monitor over here, I'm only on the 3-monitor system today, but on the far left over here, I can actually see your commentary. So by all means, sit tight. And again, I'm reading the comments as they come in real time over here. So I'll provide you guys some feedback into those as we go. So in all seriousness, turn off Skype chat, phones maybe on mute, kick the kids out, definitely kick the kids out, the grandkids out, the dog can stay, but focus, because I'm going to throw a lot at you. And this is going to be for the absolute novice to some of the most extreme traders. I think you're both going to pick up a tremendous amount in today's presentation. This is a little bit about me. So how many people here are brand new and have no idea what a Don Kaufman even is? And it's okay. Like I just, come on, people, admitting it is the first step today. Again, how many people here are brand new, have no idea kind of what TheoTrade is, have never, either met me or met us online before? Just kind of curious if you are brand new. Huh? Nobody wants to admit that one over here. Okay, if you were a little new, I'm new. Okay, so I'll give you a little bit of background on myself, and I'll kind of rip through this quickly. I watched order flow for 15 years, and in very large part, that's kind of what brought me to where I am now. And a lot of people have no idea what like watching order flow even means. So first and foremost, I've been around trade and traders my entire life. I had family that traded in the early 70s, literally before I was born, on the Chicago Board Options Exchange floor. I had an uncle that started a trading firm. The firm grew to one of the most successful firms ever around the world. At one point, they owned over 500 seats on exchanges worldwide. The firm's called O'Connor and Associates. They sold it to the Swiss bank in 1992. So when I say I grew up around trading, man, like literally grew up around trading. People always ask, how'd you get into this business? I don't know, you have an uncle that's, a billionaire, you have tendency to have an interest in it. And I did. And, 3 weeks out of college in the late 90s, I went to work in Chicago. And only about a year and a half after I was working in Chicago, I knew a couple of traders on the Chicago Board Options Exchange floor. Those traders had started a brokerage firm. There's only a handful of people working there. So they said, you should come aboard. Young guy, at the time I was 24 years old, and I started working for an unknown firm called Thinkorswim. Now, if any of you guys know the story behind Thinkorswim, it went from an unknown firm to, I was on the executive team when we took the company public in 2007. I was there when we were acquired by TD Ameritrade in 2009. And I went on to run education. I actually built the education division of Thinkorswim. Then I went on to run education for all of TD Ameritrade and their 7 million clients for the better part of about 5 years before I had a 5-year lockup clause when TD bought us. And after 5 years, I hung it up. I lasted a couple of months without doing anything. And they said, yeah, I got to do something. And we launched TheoTrade. And what you are going to learn specifically today has everything to do with not only my time at Thinkorswim, but the time, of course, at TD Ameritrade, because what we learned at the brokerage side of the business is, imagine this. We got to see everything that you did, everything you did. And we studied everything you did. And people, a lot of times like take what they used to do for granted. I had 15 years in the brokerage world. I don't take it for granted because I got to see everything everybody did. I got to watch all the order flow. I got to study the order flow. If you ask me a question about like, hey man, I've done iron condors, do those work? I can actually give you detailed statistics of like, the success and or failure of any given trading strategy that you wanted to know about. I mean, literally what we do here at TheoTrade comes from watching billions of dollars of other people's mistakes. And the knowledge, of course, that works best for retail traders. I don't even include like, market making experience in here and so forth. What works best for retail traders is very, very unique. And that's exactly what we're going to be focusing on today. Last part of this is I want you guys to know after today, you can always get a hold of me. That's an essential part of what we do here at TheoTrade. Just hit me at support@theotrade.com. By the way, we use a common inbox. Okay, I don't want you to think, oh, he's not giving my email. Just put Don in the heading and the actual subject goes right to me. Just support@theotrade.com. You guys can reach out to me at any point in the future. No problem. We answer a lot of emails. So that's a little background on myself. I've done quite a number of both CNBC. I do TD Ameritrade TV every single week. So I do a lot of media out there. Again, this is the last time I was in Chicago, which is crazy. This is one of the more memorable times on CNBC. Myself pitted against, of course, Kevin O'Leary. Let's get down to business. What are Ultima trades? So the first time that people look at this and they go, it's kind of a play on words. It's not Ultima, it's ultimate. Okay, actually it's not. Ultima has a very specific meaning in this business. Ultima has to do with, it's a kind of one of the Greeks. It's actually a Greek of a Greek of a Greek. What that basically means, for those of you that do not speak geek, we have what we term volatility in the marketplace. Everybody aware of it? Okay. Could we make the argument? Could we make the argument that volatility has been relatively high? I mean, pretty much since the onset of COVID. And you know what? I don't mind bringing this up again. I'm actually going to bring up the VIX. What is the VIX? It's the S&P 500 Volatility Index. That's the last 9 months. But let's get down to business. Let's bring up like the last 5 years. Okay. So I'm actually going to put my mouse directly on where volatility currently is, 22. Okay, that's the VIX. So very easily you can say, clearly we have been in a higher realm, if you will, of volatility. It's been a very considerable period of time, because if you look back at any previous years, like a 22 VIX, you're like, oh, the VIX is getting up there. You realize the VIX, okay, the VIX when? Like yesterday, yesterday we had a VIX. Well, it actually collapsed a little bit yesterday, but we had a VIX that was still over 30 yesterday. Now it's all the way back to the 22 level. So volatility is starting to collapse. But net, one of the things you have to understand about this marketplace, volatility is here. It's present, and it's going to be present. It's going to be, present for a very significant period of time. We'll come to that a little bit later. But higher volatility actually has resulted in significantly more options premium. Okay. And we're also going to talk about options implied volatility skew is also at historically high levels. And what we term the volatility remains at record highs. So whenever anybody asks about what's Ultima, okay, there's volatility, and then there's, what we call Vega. Vega is, okay, again, Greek for volatility. Okay. And then after Vega, you have Vama. Vama tells you how Vega is moving. And then there's actually Ultima. What we are doing right now in the marketplace, okay, has everything to do with Ultima. And I'm actually going to show you kind of what that means. Because again, you might be lost. You're like, Vega, Vama, Ultima. It's a tertiary. Okay. For those of you that are complete geeks, that probably did it for you. For those of you that are a little bit newer to this, you're like, I'm lost. Okay. Let me explain it. Let me explain it in a little bit more detail. If you look at this, this is what we call skew. What is skew? Skew, right, is ever, okay, present right now. When you're looking at how things are priced, things are supposed to follow, okay, a very normal distribution curve. But right now, the marketplace is highly, highly skewed. And you're like, I don't know what that means. Okay, well, I'm going to explain just that. Okay, this is a symbol that a lot of professionals use in the marketplace day to day. I'm going to bring it up on a trading application right now. But if you're taking a few notes over here, okay, if you're taking a few notes, skew is actually a symbol. And when I say that skew happens to be a symbol, apologize, I'm going to grab a drink here. When I say that skew happens to be a symbol, it's S as in Sam, K, E, W is the symbol. And what I wanted to show you to begin with here, this is a 15-year. I mean, skew really only dates back to 2011 kind of time frame, but look how high the skew is right now. And people go, I don't even know what that means. Okay, you will. You will know what it means here momentarily, right? Skew is incredibly, incredibly high. And what the skew is, it's literally like a distortion, if you will, in how, okay, options markets price risk. I'm going to say that again. Skew is like a distortion in how option markets price risk. And right now, this skew, which is one of the highest levels ever recorded before in this business, the skew, okay, is an absolute home run if you know how to take advantage of it. And so few people do. And this is the beginnings of understanding Ultima. We say, the skew looks really cool, like, oh, look at the chart. But how can we use skew to our advantage? Skew provides a massive edge in the sale of out of the money option premium, okay? And I know that's the second or third time I've said the word options. However, a lot of people, even if you're brand new to this business, they're not familiar with options. I'm going to tell you right now, if you're going to be involved, even if you decide to yourself, I will never trade an option ever, that's fine, but you still have to understand them. Okay, I want to make that point, okay, to you right now. Okay, and I stress this to you because if you're going to be involved in this business, there are certain aspects that you have to just get through. Some people go, I don't really want to learn about options. So why is it so essential? Okay, now, and I'm not here to pitch, you need to trade options, you need to trade options. Okay, I'm just telling you right now, if you're going to be involved in this business, right, if you do not understand the options marketplace, right, it's like getting into the stock market. You've pretty much got both hands tied behind your back at that point. It is that much of a detraction not to be able to understand options, because in many cases today, right, options are what are driving stock. I mean, literally, it's the cart put before the horse. So many traders are currently buying options, and this is actually what's tweaking, all right, and making it so beneficial for premium sellers. Now, bear with me for a second. Since the onset of COVID, we're almost 2 years into it. The number of retail option accounts, everybody's heard of Robinhood. Some of you guys have heard of TD Ameritrade and Charles Schwab, okay, and Interactive Brokers and E-Trade, which was bought by Morgan Stanley, and Tastyworks, which is just bought by IG. Billions and billions of dollars in there. Are you aware of the number of people that have started to trade in the last 2 years and the number of people that have actually traded options? Okay. Never before has anybody even fathomed this many people would ever trade in markets. In fact, it's what I call retail traders gone wild. This happens to be, this is December 3rd. By the way, I picked December 3rd only because it was I must have missed last night's report, but this is Friday. And on Friday, and again, I think it's fair to say Friday was a big boy day in the marketplace. We did, okay, 54 million option contracts traded, 54 million option contracts, okay? And if you take a look at the December of 2020, that's 2020, end of month average in December of 2020, okay, was 34 million. In 2021, you're like, this COVID thing didn't do much to the marketplace. Really? Because we jumped All right. We jumped this year is a 40 million average. Okay. This month, we're all the way all up to 51 million contracts on average. On Friday, we did almost 55 million contracts. People, I left the brokerage business in 2015. If you told me we were going to do 55 million contracts in one trading session, I would have laughed. You have to realize 55 million option contracts. And then you go, oh, whatever, man. Apple traded 200 million shares. It would take 200 million shares to hedge that many option contracts trading. It's incredible. Okay. This has changed the entire scope of the business. And that's why I say, whether you like it or not, I think you have to learn something about options. I'm going to teach you quite a bit right here, right now. Okay. Learning to sell options. So one of the first things I'll say in here is some of you may have kind of heard through the grapevine. And I'm kind of curious, how many people here have actually heard through the grapevine that selling options is a way to be able to make money? How many people have actually heard that before? All right. The awkward pause. So some people have heard this. Selling options is a great way to be to make money. Most retail traders haven't done it. Most retail traders, when you open up an account with Robinhood, when you open up an account with TD Ameritrade, remember, I come from the brokerage side of this business, market making side of the business, then the brokerage side of the business for 15 years. There is nothing that you have done that I haven't seen before. And I really I say that, with the utmost respect. People are like, oh man, I know what's going on in this business. There's nothing, okay, in terms of risk or, trading that we haven't seen, because 15 years in the brokerage world, you go through quite a bit. One of the things that you have to understand is, okay, almost everybody that gets involved in this business, you're not even you don't sell options. You have no idea what selling options even is. And you go, yeah, I do. I've been trading. Okay, so you've been trading a little while. But if you're brand new to it, the brokerage firms only allow you to buy options. When you open up an account with Robinhood, they go, you are level 1 approved. You go, the heck is that? And it means you can only be a buyer of options. You can't be a what? Can't be a seller of options. Well, have no fear. We have brokerage firms that allow you to do anything you want. And I do mean that. Anything you want. You have to have $2,000 or more in your account. You can do anything you want. But if you've experimented with selling options, you know that there's going to be risk. What we're going to do today, okay, is we're going to bring the ideas and ideals, if you will, of selling options premium to you. Okay. We're going to separate fact from fiction, myth from all the garbage that's out there. Okay. And really decipher what the real risks are of this in terms of selling options premium. Because I'm going to tell you right now, this is where edge lives right now in the marketplace. And selling options premium, this is where it's at. This is absolutely where it's at. Because think about how many millions of people, okay, are only on the buy side of options. They can only buy options. Okay, I'm talking millions and millions of people. Every day they open up accounts, they can only buy options, which actually affords you the ability, okay, if you know what you're doing in this business, to be a premium seller. And I stress this to you, okay? Don't panic. Now, this is the point where people go, oh, I don't know anything about options. That's okay for today's session, all right? A couple of things. I'm going to take this presentation and move it into a very wide spectrum. A little bit for the absolute novice, a little bit for the absolute extreme trader. So I want you to understand that if you're tuned in, we have a lot of people tuned in today. I want you to understand, though, if you're tuned in, that we're going to hit something, okay, that's going to kind of strike your fancy, if you will, because, again, we're going to start in some of the novice areas, and I will literally then enunciate, even those of you that are really extreme traders, you're going to learn a lot. For those of you that are brand new, I want you to grasp big, broad strokes of logic. For those of you that are a little bit more experienced or even have sold options premium, okay, I want you to grab the little tiny nuances, what we call criteria, specifics, details of what I'm actually doing. The other aspect is big news flash here. Selling options premium, Ultima trades can now be done in incredibly small accounts, $2,000. Okay, you do have to have that threshold, $2,000. Okay, and you can sell options premium. Get this, $5,000. And you can sell options premium now in an IRA. And most people are, I can't do this in a retirement account. You absolutely unequivocally can do this in a retirement account. They have changed the rules in the last 2 years. Most people, COVID's going on. You don't really pay attention to what the rules are in the brokerage world. Some brokers, though, they haven't changed their rules internally. Okay. There are some brokers, though, that let you do anything you want with $2,000 in your account, and it is good. Let's get down to it. Again, big concepts. Start talking about probability and risk. Let's dive right in. The many facets of selling premium. Whenever I talk about, selling premium, you're like, what does that really even mean? It means selling options. Okay. And we're going to explain what selling an option is right now, but selling options, okay, it can be referred to as selling premium. It can be referred to as credit spreads. You guys have heard some of these terms, right? So you got credit spreads, you got selling premium, you got a short call, short put, right? Short call spreads, short put spreads, bear call spreads, bull put spreads. You got delta neutral trading. You got selling naked. I'm out there. Okay. Selling premium can fall under any one of those categories. Yeah, delta neutral trading in many aspects and many facets of trade is actually selling premium. But again, selling premium can be both bullish or bearish. But generally speaking, for today, we're going to be market neutral. So one of the things that you're not going to hear a lot about, and I know everybody wants to hear this, like, what about the MACD and the Fibonacci and the Bollinger Band? Push that aside for a second, because I'm going to tell you, you have any idea what Jerome Powell's about to do next week? Yes, the Fed's coming back next week. Okay. We need to focus on bottom line. What if you don't know what this marketplace is about to do? The only aspect I think that's probably relevant is that you know that we're going to be probably very volatile in the near future because we have a little problem called inflation. I don't want to go down that path, but I think it's necessary to go down that path. With inflationary pressures, there's one aspect that I think that's going to be relative, and that's we're going to be volatile. Okay. And you need to be prepared for that volatility. So let's not worry so much about direction because volatility is going to throw you for a loop. I mean, did you think that the market today was going to be up 100 points? S&Ps are up 100 points right now. Go, yeah, I knew it. There's always one in a crowd. But I mean, really, put it aside because selling premium is going to work regardless of that market direction. Probability and profitability. Your trading is based on probability. We can create trades all day long that have a 90% probability of success, but you could still lose money, right? Probability alone does not make you profitable. Remember that. And I say this, okay, because a lot of people come here and they actually send me emails. Again, I've been in this business for a really long time now. I started trading again in the late 90s. I'm approximately 23 years into a career of trading. And I can still get people every single day that send us emails. And we take on board over 400 emails a day here at TheoTrade. And they send us emails every single day and they say, how often do you guys write? And I'm just like, you got to be kidding me, man. In today's environment, listen to me. I can be right as much as you want, but being right and making money are two very different things. And I want people to understand that because I think it's critically important to understand that. Okay. By the way, yes, it could be done in Canada too. Can that be done in Canada? All right. You're going to be able to do a lot more in Canada. All right. Continuing on over here. So let's get into it. Markets are a bit of a trade-off. Markets are always a series of trade-offs. Higher probability can actually be higher risk. You can be right 90% of the time. Again, you can still lose money. And I'm giving you both ends of the spectrum. 90% of the time, still lose money. Well, where can you find edge? Let's actually get down to business over here because that's what we're kind of here for is, it's all good and talk, but let's actually start to get into the trade, right? So let's find some edge. Let's talk a little bit about probability and premium selling tactics. I'm going to start easy. Okay. I'm going to start easy. When I say I'm going to start off easy is I'm going to go easy on you from the get-go. And we're going to use, in this case, like a $50 stock. And I'm just going to give you, okay, kind of a quick and dirty example in here. And again, I'm going to kind of write on my, my write on board over here, dragging out the write on board. So here we have effectively a $50 stock. One of the first things though I want to mention on this front is, do I own the $50 stock? No. I don't own the $50 stock. Do I have any intention of owning the $50 stock? No, I have no intention of owning the $50 stock. What is the $50 stock? The $50 stock is called stock. Okay, every stock to me is called stock. Anyway, it doesn't really matter. Like people get so infatuated. I'm trading Tesla. I'm trading, Nvidia. I'm like, oh my gosh, who cares? No. You're trading NVDA. They're like, do you real? But Don, their chips are so what? What are they? Does anybody really care? they were so great, but 5 days ago the stock absolutely tanked. No one cares. All you're trading is a symbol and a volatility. Again, remember that. Have a little bit of disassociation. Ooh, does it feel warm and fuzzy to trade Apple? Okay, because you have their phones? No, it doesn't make a difference. So here's a $50 stock that I don't own. I'm going to go out in this very first example, and I'm going to sell an option. I'm going to sell an option on the stock that I don't even own, which again, I'm going to show you what is, thought to be a very high risk trade, but it's also a very, very high probability trade. So just bear with me for a moment. We're going to go out, okay, in this trade, and we're going to sell, okay, a 60 call. And that 60 call is going to be trading for a premium. What's the premium going to be? I'm going to make it a perfect dollar, all right? A dollar, and that happens to be what we term a credit. So all I'm going to take this down here, I'm going to go sell a 60 call, collect me a dollar credit. And we're going to say that this 60 call is good for, let's get crazy. Let's make it 1 month. All right. Time out. Let's actually explain the mess that I just created on the screen. Shall we actually explain the mess on the screen? Do I own the stock? No. Do I want to own the stock? No. Am I going to own the stock? No. Why wouldn't I want to own the stock? Because it ties up a lot of money. Just leave me alone with that. You're going to go out and we're going to sell a 60 call. Some people go, I don't even know what an option is. That's fine. Let's not even talk about selling an option first. Let's talk about buying an option. Let's talk about the 60 call. Just worry about a 60 call for just a second. Okay. So what is a 60 call and what does a 60 call give you the right to do? Let's assume this is your very first trade. You're going to buy a 60 call. And what does that mean? Buy a 60 call. 60 call is a strike price. The 60 call says, I want the right to buy the stock at 60. Are you obligated to buy the stock at 60? No. Remember, I'm talking about being a buyer right now. By the way, palms towards me, buyer. Palms away from me, seller. I'm going to be a net buyer of the 60 call. So I'm going to buy the 60 call. 60 call gives me the right to buy the stock at 60. All right. But the stock right now is trading at 50. Who in their right mind would want to buy a stock at 60 if the stock's only trading at 50? It's a big difference. Okay. It's a huge difference. How about somebody that's wildly bullish? Somebody that thinks this is going to be the next Tesla. Somebody thinks it's going to be the next Lucid. Somebody thinks it's going to be the next AMC. Okay. They're buying the 60 call because they're taking a little bit of a flyer. Like you got to realize though, it's a low probability trade, but can you imagine if you bought the 60 call, you buy the 60 call, and let's say the stock went to where? 70. Okay. So if you buy a 60 call and the stock goes to 70, you have the right to buy the stock at 60. Are you going to buy the stock at 60? Okay. Think about this for a second. You have the right to buy the stock at 60. Let's just do this. You bought the 60 call and then the stock goes all the way up here to 70. You go, hallelujah. So you have the right to buy the stock at 60. Can you buy the stock at 60? You could, but you don't have to. You could just turn around. You bought the 60 call, but the stock trading at 70 is going to be worth at least $10. At least $10. You go, who's going to give me $10? Well, if they don't, you can just buy the stock at 60, sell to somebody at 70, you'd make your $10 that way. You don't ever have to do that though. Okay. For every buyer, there's going to be a seller. That's what market makers are there to do. They're there to facilitate the other side of the trade. All I want you to understand though, conceptually speaking, like, can you imagine the stock going from 50 to 70? That is a big, big boy move. I mean, that is a very, very rare thing. But okay, in options, buyers have rights. You have the right to buy the stock at 60. Okay. But there's somebody on the other side of that trade, and that is called the premium seller. So what is a seller? See, the weird thing is most of the time when you guys get involved in something, like you can pretty much only be a buyer. Most markets are very one-sided. What does one-sided mean? You know, if you walk into a car dealership, and I'm serious about this, if you walk into a car dealership, you know, it's a marketplace. Okay. And I put the parentheses, it's a marketplace. Okay. But when you walk into a car dealership, what are you? Okay. Well, the individual that walks up to you knows that you're a what? You're a buyer. And they got you right there. The second you walk in the door, they got you coming and going because they know that you're a buyer. Because, hey, how much is that beautiful car right there? They go, for you, $100,000. And if that car, you think it's overpriced, you go, what do? All you can do is walk out. You can't go sold. But in the options marketplace, you can. Think about that for a second. You look at the 60 call. Okay, you look at the 60 call and everybody's like, on the one-sided marketplace, you go, yeah, but options aren't a one-sided marketplace. Yes, they are. They are to people that trade at Robinhood. They are to people that trade at TD Ameritrade. Think about this for a second. Options are very one-sided marketplace because the brokerage firm is only allowing you to be on one side of the trade. The brokerage firm says, you only have $10,000 in your account. You can only buy options. You got to have like 250 in your account, 250,000 in your account, like for some people that want to sell options. But again, they changed all those rules. And I'll give you one right now. Now it's a fair and two-sided market because you can come in here and say sold. If that car is overpriced, you go sold. Like everywhere I walk into, like I look at things like how they're priced right now and I go, I'd love to be a seller of that. I don't want to be a buyer of it. I mean, inflation is driving me nuts because everywhere I look, I'm like sold, 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 sold. I want to sell everything right now. Think about this 60 call, okay? There's so much demand for the 60 call, give it to them. Sell the 60 call. 60 call. When you sell a 60 call, though, you're selling yourself into a definitive obligation. You're selling yourself, okay, into what, right? If you sell a 60 call, someone has the right to take stock from you at $60. Now, again, some of this might sound so basic for some of you guys, okay? Some of you guys, seriously, it sounds so basic, but I'm telling you right now, okay? Even people that have been trading for 20 years, they don't get the real conceptual side of the sell side of premium. So you sell a 60 call, okay? And now you're obligated to give somebody stock at $60. And you go, but you don't have any stock. But what can happen to you once you sell the 60 call? I know I'm spending some time on this today, but it's important. It really is. So I sell a 60 call. What's the most I can make? $1. How come I can't make more than $1? You can't sell something for $1 and then go, I want more. It's like selling a car. You sell somebody a car. Nobody comes back a week later and that goes, that was a hell of a car you sold me. Here's an extra grand. Nobody does that ever in the history, okay, of cars. Nobody, oh, that was, I feel guilty because you sold me such a good car. Nobody's ever going to do that. You sell a 60 call, the most you can collect is $1. What happens to the stock? The stock can stay flat. If the stock stays flat at 50, you keep your $1. If the stock goes anywhere down, down to 40, keep your $1. If the stock goes up, let's get crazy to 55, you still keep your $1. If the stock goes right here to 59, you will what? Wet yourself, but you still keep your $1. Where do you start losing money? Not even at 60 do you start losing money. It's 60 plus the $1 credit. So you start losing money, roughly your break-even point. We call it the BEP, break-even point. It's approximately 61. But if the stock goes up to 70, what are you? Ooh, I don't care who you are. That is gonna hurt. It's gonna hurt if the stock goes to 70 because you're effectively, like the way to think of this, you're obligated to give somebody stock at 60. You go, I don't have any stock. Technically, you buy the stock at 70 to give somebody stock at 60, then you lose what? You lose $10. But don't worry, you collected $1 up front. Push all that aside for a second. All I want you to gather right now, seriously, what I want you to gather right now is simply this. Think about how high probability it is to sell the 60 call. Think about how high the probability is because stock stays flat, you make money. Stock goes down, you make money. Stock goes up, you make money. Stock has to go way up. I mean, ridiculously up, and you could still make money. The only way you can actually lose money is if there's a torrential move to the upside. Now, we're going to worry about that in a moment. Okay. Now, everybody okay at this point? Because I'm going to take you into a live trade. And I always use for this example, okay, and I do, I like to use for like a $50 stock, I like to use a volatile underlying. And I've historically used the stock Twitter. And again, I try to make my examples consistent. So I use Twitter because Twitter is always trading right around $50. It was 70, okay? And then we finally got rid of Dorsey. Yay! Come on. All right, there's at least one thing we can agree on. And nobody agrees on anything today, but one thing that everybody can agree on, nobody likes Dorsey. Okay, so he finally left. That was last week. He's like, that's it, I am out of here. Oh, come on, you know it's true. Come on, is one person going to chat in and actually like him? One person, okay? Yeah. All right, it's kind of like he's like today's Larry Ellison. He's the new Larry Ellison. Okay, it's the CEO that everybody loved to hate. Take a look at Twitter. Sorry, they don't like the new guy either. I'll agree with that, sir. I will agree with that. Twitter can't find a CEO. I'm just going to go 45 days out, and I just want to make a quick point. We're going to go way out of the money here, and I'm going to open up something called probability out of the money. Okay, here's an option that has a 90% chance of expiring worthless. And I just wanted to show you that, like that. It's that easy. So this is a $50 stock, or in this case, a $46 stock, right? $45 stock. And here's an option trading for about 50 cents. You know, if I went a little bit further out in time, okay, we can actually bump up, you know, the amount you're going to collect. Like this option though has a 90% probability of expiring worthless. And when it comes down to it, this is what we're here to talk about. We're here to talk about price. We're here to talk about probability. But more importantly, I just have to get through some of these very, very mild tactics, okay, for you to understand where the edge lies. And again, if you think that this is very rudimentary, that's okay. It is. We're gonna pick up the pace now just a little bit, because what I'm gonna start to get into is some of the finite criteria, some of like what makes this unique, why right now is selling premium so effective. I'm gonna be honest, since the onset of COVID, selling premium, it's not just where it's at, okay? Selling premium since the onset of COVID, I'm gonna show you every single trade I've done this year, okay? It has been absolutely phenomenal. Okay, selling premium has been, I mean, there's so much juice out there, juice being premium. And well, I'm going to show you that here momentarily. So I just figured I'd bring up Twitter, albeit briefly. So let's move on a little bit. Selling options, okay, equals positive time decay. Again, every time we move forward here, I'm just going to add one little kind of incremental area here. And when I say that selling premium equals positive time decay, when you sell options, every day that passes sees the dwindling, if you will, of options premium, okay? As time passes, the options that you sell decay. They go, oh, I'm melting. I don't know, however long I've been doing this, like I always think of the Wicked Witch, you know, whenever I think about like options decay, you know, but it's like an ice cube just kind of melting away. So we're going to review time decay for just a moment. I'm going to tell you exactly why. This, okay, listen very carefully. I don't care if you're brand new or if you're the most extreme trader in here. Listen very carefully. Why? Because even for the most experienced traders, okay, most people have been led down a very, you know, misguided path of how options really do decay. Okay, but I'm going to give you a little bit of a synopsis of this, right? So let's get down to it. Some of you have actually traded some options before, buy or sell, doesn't make a difference, right? This is a decay graph. So I'm going to draw one up here too, right? How many people have actually ever felt like the burn of options? Right? Just by, you don't have to show your hand in here, just a Y for yes, N for no. How many people here have ever bought an option and felt the decay? All right, so we're going to go out right now, my example, and we're going to buy, okay? Let's just make it like a 100 call. And the 100 call is going to be trading for $3. So right here, you're going to buy a 100 call. It's going to be trading for $3. And this one has exactly 1 month to go to expiration. Okay, so 1 month to go to expiration, you buy the 100 call. And what happens to people when they buy options? Okay, we're going to say that the 100 call, and you're like, where's the stock trading? I don't care. Let's make the stock trade at 100. So the stock is at 100 and you're trading a 100 call. So you buy the stock at $100, or I should say you buy the call at $100 because you don't have the money to buy the stock. You pay $3 for that call. A couple of days goes by, and a couple of days goes by and nothing happens to the stock. And the option starts to dwindle in terms of price. So it goes from $3. And then a couple of days goes by. By the way, this is time moving forward. A few days goes by, and then the option drops in price to $2, for instance, in 80 cents. And your first, by the way, I've done this so many times with like clients and had this discussion that their first instinct is, I bought the thing for $3. It's a 100 call. The stock doesn't move for 4 days, okay? And you lose only 20 cents. You're like, I'm okay. That's good. I'm okay. I'm okay. It's okay. But what they don't really realize is they're about to start to hit the acceleration in the curve. And all of a sudden, a few more days goes by, okay, and they hit that big acceleration of the curve, and all of a sudden their 280 goes to $2. Now you had an option that you paid $3 for. It dropped to 280 after 3 or 4 days. But then early the next week, all of a sudden it's sitting at $2, and the stock just hasn't really done anything. It went up, and you're like, yeah, and then it went down. You go, oh, now the option's worth $2. And this is where you go, I'm okay, I'm okay. And then you switch to, I'm okay, I'm okay. You know, the voice, the tone starts to change. Before you know it, you're not okay anymore. The option then is going to drop, okay, precipitously at this point. All right, because you're in the maximum decay, like, you know, those last 2 weeks. And now your option's actually going to drop to, this is always a fun one. One day you wake up and it's trading for 90 cents. You're like, oh crap, it's not even worth selling anymore. Okay. And then you watch it from 90 cents and then it goes all the way to 30 cents. And then it's worth massively unchanged. It's worth nothing. And it's the life of how people buy options, and the whole psychology, you decay with it. Like, that's the one thing that people, they don't put enough stock, if you will, into the psychological effect of having bought an option and decayed along with it. It was worth $3 and you're like, yeah, then it was worth 280. You're like, I'm okay. Then it was worth $2 and you're like, I'm not okay. And it was worth 90 cents. And at 90 cents, you literally throw your hands up in the air. Everybody thinks the same thing. They all think to themselves, screw it. It's not even worth selling at this point. It's only worth 90 cents. Nobody ever gets out at that point. They go, it might come back. It might. Yeah, sure. Anyway, then it goes out worthless. How many people have kind of experienced this? Okay. Does it sound familiar at all? Okay. So now we're getting somewhere. Okay. Oh, come on, admitting it's the first step. I'm reading chat. There's always going to be one in there go, I have never experienced this. That's probably because you haven't traded. One of the things, though, that is often missed about decay, and this is the point that I want to make, and this is for those of you that are experienced and serious about this, the decay graph that they're showing you, and the decay graph that even experienced people understand, is not correct. You go, what do you mean it's not correct? This decay graph is for what we term near money options. What's a near money option? It means if the stock is trading at 100, it would be like the 100 call or the 105 call. Okay. That decay graph is only effective for near money options. Now is where I'm going to start to blow your mind. Okay. Now we're going to go on to a $100 stock. Now things are going to get a little bit more serious. We're going to pick up the tempo a little bit. So now you have a $100 stock, and I'm going to go out and I'm going to sell something. What am I going to sell in this particular case? I'm going to go and do the exact same example I just did a moment ago on a $50 stock, but now I'm going to do a $100 stock, and I'm going to make a good point over here. First thing is this, okay? We're going to go out and we're going to use a 3-month, okay, option. You go, what? Sit quietly for a second. We're going to use a 3-month option. And I'm going to come out here and I'm going to sell, okay, a 120 call. I'm going to keep this nice and easy. Okay. I'm going to collect a $1 credit. Take it down here. So I'm going to sell a 120 call, collect $1 again, credit. This option, way out of the money, but it's 3-month. It's a 3-month option. When I say it's way out of the money, how far out of the money is it? 20%. Do you know that marketplace would have to rally like 20%? The stock has to go from 100 to 120 for you to feel like, oh, I'm getting nervous. 20% move. This could be a stock, but it could also be a major index product. What about an index product? Okay. You know, like, what about Apple? Apple's not exactly like a fast moving animal, but let's cover it. Let's cover it. So I go out and I sell a 120 call. People go, How can you sell something you never owned? I thought we got through this already. You go out and sell a 120 call because you're selling yourself into an obligation. Do I own the stock? No. Do I want to own the stock? No. Am I ever going to own the stock? Not in this example. Do I own the stock in any way, shape, or form? So how am I selling a 120 call? Because the brokerage firms, if you know how to do it, actually allow you to sell a 120 call. So I sell a 120 call, I collect $1. Now what happens? I'll tell you exactly what happens. After you sell this thing for $1, stock stays flat, you keep the buck. Stock goes down, you keep the buck. Stock even goes up even big. Stock can go to 110, you still keep the $1. All you can focus on right now, though, is the 3-month, right? Because when you came in today, you said to yourself, I want to learn to make money every single month. I'm going to show you exactly how to make money every single month. We're going to use options that are a little bit further out in time. Again, I want to reiterate this. I'm going to show you how to make money, okay, every single month. But we're going to do it with longer duration options. And I'm going to show you exactly why. Are we okay so far? Because now we're going to go into a live market. Okay, by the way, the probability of this thing making money, sky high, just sky high. How high? I'm actually going to show you now. Okay, so if we will, we're going to go into a live market. And in this marketplace, I'm going to go into a product called the spiders. Okay, the spiders. Let's take a quick glance over at markets. What are they doing right now? S&P's up 100. It's a big boy move. All right, so the S&Ps are up 100. I'm going to go ahead and close up this left side bar. And I'm going to go full 3 months out. The full Monty, 3 months out. And I'm going to open up the March options. By the way, the March options have 101 days to expiration. There are some people that are tuned in right now that have never, ever even seen an options chain. Okay, so the March options, they have 101 days left to go. It's just over 3 months. Okay, I'm going to open up a ton of what we call strikes. Strike. Okay, and I'm scrolling. Keep those chickens scrolling. Right. The underlying right now, which is the spiders, that's the stock. It's actually an ETF. It's sitting at 468. Still scrolling. Okay, we're going to sell an out of the money call, just like we've been doing. We're going to sell an out of the money call, and we're going to go way out of the money. Which call are we going to sell? Oh, I'll tell you what. I'm going to do this right at the 520 strike. Why? Because it's trading for $1. Because I've been keeping my examples consistent. I like to keep my example consistent because I'm a little crazy. All right, I'm going to take the example and I'm going to write it up here. Okay, here's a marketplace. And by the way, this is a real marketplace. I mean, it's live, and we're actually going to work orders in here in just a moment. We're going to go out here, and we're looking at a March option. Okay, so we're looking at a March option, but the key is on this March option. All right, this is a March, all right, 520 call. So we're going to sell. Okay, 520 C stands for call, and we're going to sell it. I think I could probably sell this for very close to $1.10 at this point. It's $1.10. So we're going to sell it for $1.10. Okay. Credit. Now, let's say that that's all that I do. Okay. So I'm actually going to put that up there. I'm going to work the order. By the way, to work the order and work the order diligently, do you use a market order? Oh, hell no. Okay, I don't use market orders ever. So again, I worked in the brokerage business for a long time. Don't you ever use market orders. The market here is $1.06 at $1.22. Ooh, it's getting wide. So I'm going to come in here at mid price. No, I don't use mid price. Okay, I'm actually going to work my order initially at as $1.18. Now here's the rule. The rule, and again, I'm spending extra time in this. I hope you guys don't mind. If you have some time today, it's worthwhile because you're going to learn a lot. I'm going to work this order at $1.18. The reason is if they don't fill me instantaneously, they have to represent me to the crowd, meaning that this marketplace will actually change to $1.06, to it and change to $1.18. You ready? I'm just going to work a one lot in here. Confirm and send the order. Okay. If they don't fill me instantaneously, they have to put me on the screen. There I am. I'm $1.18. Okay. Because I'm the offer. So I'm the best market going right now. Okay, so I didn't fill. You go, but let's go in here. Let's actually cancel, replace the order. Let's come in here to $1.17. Remember, if they don't fill me instantly, they have to represent me to the crowd. Represent me. This is going to move to $1.17. Fill me, okay, or represent me. They represented me. So Captain One Lot rides again. People are not aware. They're like, what are they? They're just screwing with you, man. They're making, okay, let's go into $1.16. Told you, I'm going to fill at a minimum of $1.10. I'm probably going to get a better fill than that. There's $1.60. I'm just what they call walking the order down over here. Let's cancel, replace the order. Let's get business done here. Maybe $1.15, huh? Ooh, it's getting close. Okay, we're tightening up the market here a little bit. All right, are we having fun yet? Okay, anybody? We having fun yet? So I can come in here. Again, I can keep cancel replacing the order. I'm just showing you can walk the order down by a penny, and you can actually influence the markets. And this is an aspect that so few people are really familiar with, okay? That I could just leave the order in there at $1.14 and eventually I will fill, okay? But this, in this particular context, okay, I'm trying to make a brief point over here. And the brief point is a very simple one that, okay, you wanna get better pricing, learn to actually execute trades effectively. I'm gonna leave it in at $1.12 and filled, okay? So there's a market of $1.07 and $1.15. I just filled it at $1.12. Think about that, because if you went in there, you tried to sell, $1.11 is the mid price. You see, look, there's my fill. Okay, I sold that thing at $1.12, which is better credit than I even said. Okay, so I just went out there and sold a call. Okay, and I sold the call naked. Don't worry about the risk right now, because we're going to talk about risk here in just a moment. Okay, what I want to elaborate on is how much money can I make on this trade? Most I can make on this trade right now, okay? The most I can make on this trade is roughly what I sold it for. What did I sell it for? I sold it for $1.12. So I'm going to write that back up there, okay? Because again, accuracy counts in this particular case. So where's my pen? So we're going to go out there, all right? And this is a March option. Ready? Okay. March option. And this is sold now for specifically, okay, $1, okay, 12. That's sold for $1.12. Actually, I'm going to write up the call again. All right. So I sold, and this is the 520 call, and I sold it for literally $1.12, and that's $1.12 credit. Okay. Now, time out. Do you really think I'm going to sit here for 101 days and wait for that thing and to make my $1.12? No. Okay. All I want to do is this. Okay. Here's the name of the game. I want to get in. I want to get out. I want to make some money on a month-to-month basis. How much money can I make in the next 30 days? How much money can I make in the next 30 days? I'm only going to hold this thing for, let's say, 30 days. Let's just put it out there. Okay. Take the assumption I'm only going to hold it for 30 days. I have an answer to that. What we're going to do here is we're actually going to close up the 101-day option. We're actually going to look at the February option. Why am I opening up February? I'm opening up the February option, okay? Because the February option, and again, this is very new to people, okay? The February option is almost perfectly 1 month into the future. Does that make sense to people? Like if you had a 101-day option, what's a 101-day option worth 30 days from now? Let's fast forward and look at the February option. That's assuming all factors being held equal. But what I want you to see is this very critical aspect. You think that this option is not going to decay because it's 101 days out. You have this option that's way out in the future. It's like almost out of your reach. I argue that the decay rate of far out of the money options is absolutely phenomenal. This is what Ultima is. When people ask me what Ultima is, in the end, okay, it's not just about time decay. This is about volatility decay. I want you to take a look at the 520 calls. There they are. Because what I can do, and again, I'm highlighting them, what I can do in less than 30 days from now is I can take that March option and I can buy it. And I can buy those very same 520 calls. And what am I going to buy them for? 50 cents. What did I make? I made over 60% of the option premium in less than 30 days. Okay. With an option that's so far out of the money, it's like in the nosebleed sections. Think about that for a second. Because people are out there and they're selling short duration options, you're going to get killed. They do not understand this business. Okay. Right now, good options premium, safe options premium is in the distance. Okay. It's to sell a little further out in time. This is what Ultima really breaks down to. Okay. And again, I've got options sold here. I've got options sold here. Okay. If you look at my, QQQ position, I've got options sold out here. Okay. If you look at my S&P options and futures positions, okay, where have I got? I got inventory out here. When I say inventory, 73 days, 45 days. Okay. Again, I am selling some dated premium. Why am I doing this? Because, right? Typically, traders sell short dated options, but that is why people are tuned into this webcast. Okay. This is what we do here at TheoTrade. okay, is mathematically solve for where the best edge lies for retail traders. Does this make sense to everybody? Because again, I want to make sure, right? It's essential that everybody actually understands. So I'm making, like, I just sold an option for $1.12. I can buy it back for 50 cents, even after transaction costs. And transaction costs are so negligible today. Even after transaction costs, though, and everything. If you can make between 50 and 60%, I don't care, call it 50%. Call it whatever you want, 50, 60% for less than 30 days. Like, we're so far out of the money. All you need to know now is what, okay, is the right options to trade. That's exactly what we do here at TheoTrade, is we actually develop criteria. And what criteria happens to be are the specifics, the nuts and bolts. By the way, I'm showing you a trade. I'm showing you a trade here inside of the spiders. And I just jumped around a little bit, but I'm showing you a trade here in the spiders. Can this be done in other underlyings? Of course it can. Unequivocally, of course. Okay. This is not just about the spiders, but I thought this is just an absolutely pivotal example for some of you to understand, with the assumption that, again, people are selling short dated options. You want to know why you shouldn't sell short dated options? For those of you that are experienced, look how low the volatility is here. If you sell short dated options, you're selling low volatility. Okay. Look at the volatility in my option that I'm selling. I'm 101 days out. Okay. I'm at a 25 vol. Yeah. Do you realize? Okay, the volatility of this option, it's what? I mean, it's dramatically higher. There's actually volatility decay from here to here. The volatility that's actually coming out of the option helps dramatically. Again, this is what Ultima means. This is what Ultima is about. It's about phenomenal decay rates in options that you would have otherwise never looked at. All right, listen. This sounds great because we're doing trades that have a 90+% probability. But the one aspect that you have to focus on here, because I don't want everybody to look at this and they go, yeah, I'm going to go out and sell options. But you got to think to yourself, there's what they call the 90% probability and the 10% hammer. Because if you will, go back to this trade for just a moment. Okay. And again, I don't want everybody getting lost in the weeds. I really do want you guys to understand this, because to understand it is, listen, we want more people to be able to trade this. This trade that I'm looking at right now has a 93.68% probability of expiring out of the money. Okay. But I'm never going to hold it for the full 101 days. This trade really, okay, has closer to a 98% chance of making my 50 to 60%. And that's the point that I really want to hammer in. You go, wait, what? Okay. This probability calculation right here, this is probability out of the money. Every trading application has probability these days. Everything has probability. You don't have to be on Thinkorswim. You be on Thinkorswim. Look, you can come over here to Tastyworks. I got Tastyworks too. Listen, I trade a lot. These are a lot of positions I have on. In fact, I have a couple of positions that I absolutely am needing to close in here. Okay, so it's a party. Anyway, probability calculations are on all the major trading applications. And if you will, like right here, right now, you need to understand, my trades got well over a 98% probability of making that 50 to 60%. Okay. But what's going to happen to me when I am wrong? And I actually like to call this the 90% probability and the 10% hammer. When you trade high probability strategies like this and you're wrong, you get hammered. Now, how many people here, and I'm serious about this, how many people here have ever sold options premium? A lot of people, okay, have, right? A lot of people here have. And if you've ever attempted to sell options premium, I know what happens. You make money, you make money, you make money, you make money, you get killed by a train that you never saw coming. And it's evil. And by the way, most people, when they learn to sell options premium, they're not even doing it the way I'm doing it. When you guys learn to sell options premium, come on, tell the truth. What are you using? Using iron condors. Sorry, I'm looking over here at the other screen as you guys answer. So you guys actually do what's called an iron condor, which what an iron condor does is it sells a call and it sells a put. And then it buys a call and buys a put. And it gives you a risk graph that looks like, wait, like that. Yeah, like that. Okay. It gives you a risk graph like that. An iron condor is a hedged position. And everybody goes out and they learn an iron condor. You took some class and you learned an iron condor and yada, yada, yada. You went out and sold an iron condor, and an iron condor is a very high probability trade. It's probably upwards of 90%. If you took a class about an iron condor, somebody taught you to sell an iron condor, and the iron condor, again, had like a 90% probability. Sound about right? Okay. Does it sound about right? Yeah. And then you made money on the iron condor, the very first one you did. And where'd you do it? You did it in a product called the spiders, just like I showed you a moment ago. Go, oh, I've seen this movie before. Okay. I know that you guys are watching this right now and you're probably thinking, like, I've sold options premium and I got run over by a freight train and it hurt. I know it's exactly what I'm addressing right now. So you went out and did a trade on the spiders and you made money. The very first trade you did, you made money, and you're like, holy crap, I actually made money. See, people's first instinct when they make money off selling premium is, holy crap, it actually worked. That should not be your first thought, because the trade has a 90% probability of success. It should work. By the way, the second trade you do is also in the spiders, but instead of doing one contract, you're like, I have a $50,000 account. I will do bigger contract size. So now you do like a 3 or 4 contracts, right? And you do it in the spiders. And the second trade that you do the very next month, you made money, and you're like, oh, I'm going to be the next Warren Buffett, because 2 months in a row, you actually made money. The third month, you've only been in this business now for 3 months. Okay. You've been knocked around with 20 other strategies. Now you're trading iron condors and you're like squawking your feathers. In the third month, you step into a product called the SPX, because you had 2 months of success. Now you're trading the SPX. By the way, just for those of you that need to know, the SPX, okay, is like throwing 100-mile-an-hour fastballs at you. Okay, they throw as hard as they possibly can in there, and they don't give a crap whether they hit you or not. That's the only way to think about the SPX. Trust me, I traded in there. That's where I managed risk. There's not a product in this business that I know better than the SPX. Okay, everything. I know the floor brokers' names in the SPX. Anyway, so now in the third month, you're trading the SPX, where they're throwing 100-mile-an-hour fastballs. And guess what? The third month, you make money. You did a 1 lot in the SPX. You're like, the SPX is 10 times the size of the spider. So doing a 1 lot in there is like a 10 lot, okay, in any other product. I mean, this is big boy stuff. On the fourth month, you get a little cocky and you do a 10 contract trade in the SPX. And on the fourth month, the market's got like a fishing pole. It's like, come on, come on, come on. And on the fourth month of that iron condor, you put on the 10 lot, not only does it wipe you out and take all the profits from the previous 3 months of profitability, but it also takes half of your trading account, okay? You got hit by a train, and it was like the market knew. It actually baited you, little deeper, big contract size. Come on, come on, come on, okay? And it took 4 or 5 months before what? Before the inevitable. You got absolutely wiped out because you had absolutely no risk management whatsoever. What was your risk management? Prayer is not risk management. Trust me, I have tried it way too hard for that crap to work, okay? You have to understand that this business is completely diabolical, just like it sounds. And by the way, people, whenever they hear this example, you're like, oh crap, man. It's like this guy actually saw my account. I did for 15 years. What do you think I did it? Like Thinkorswim and TD Ameritrade. I ran the entire education division. We had 7 million clients. How do you think we built education? We looked at the client accounts. We don't look at hey, what's Mike's account doing today? That's not how it worked. We actually had an entire group. We actually called them the nerdery at TD Ameritrade. Dead serious. We called them the nerdery. It was a bunch of mathematicians and like actuaries and stuff. And you get to ask them questions. You go in a room and you go, well, sir, if everybody did an iron condor, what's the outcome of that? And they go, oh, it's bad. It's very bad. And you start exploring, how many months did people last before they blew up the doors on the iron condor? We could see everything. And I got to tell you, that's the path that every one of you will go down. If you're not told this, you will walk down this path, guaranteed. Okay. And I'll tell you right now, anybody here that's actually sold premium, it's like, oh man, he saw my account kind of thing. And, don't feel guilty. Listen, okay. Everybody walks this path if you're not told otherwise. But then here's the follow-up to this. Okay. People go and they make money. And on the fourth or fifth or maybe sixth time, they get absolutely wiped out. And again, the market always waits for you to amplify your contract size before it wipes you out. But then you go back to some crazy class and they go, you didn't learn how to manage your risk. We got to teach you how to fix trades gone wrong. Okay. I can fix it. I know I can fix it. So you go back to this class and they say, oh, you can fix your trade. I'm going to tell you right now, let's just cut that garbage out. Fix is a very, very dirty word. Very dirty word in trading. 15 years in the brokerage business. If I sound a little cynical, it's because I am. Good trades gone bad, just get out a shovel and just keep digging. Okay. Anytime that you try to fix something, people do this all the time. They do it in stock trades, they do it in options trades, they do it in futures trades. Hell, they do it even in crypto. They go, oh, fix me a trade. Okay, how are you going to fix a trade? I'm going to do more of what is not working. I'm going to do, think about, because that's exactly what you're doing. I'm going to do much more of what is absolutely not working. So if you do more of what doesn't work, it will definitely fix it. You go, oh, that sounds kind of cynical, Don. Yeah, no kidding. So anytime you're fixing a trade, you're going to add more risk and more commissions. There's absolutely unequivocally, think about it. There's no way to fix anything without more risk and more commissions. Some fixes will work. The very notion of fixing a trade throws more, good capital after bad. People, you got to learn how to do this correctly. The best analogy I could give you for fixing a trade, you take a car and drive it off a cliff and bring it to a body shop. They're going to look at the car and they go, that's a piece of junk. It's totaled. I mean, there's certain cars these days, you get into like a fender bender these days. They go, it's totaled. If it's like a Tesla, they go, oh, it has a scratch in the door. It's totaled. The same thing is true of your trade. You got to do this correctly. Okay. And I equate, like a scratch on a car or a damage in a car to how we're going to trade. Okay. Because we're going to go out and we're actually going to mitigate risk before we even sell premium. Now I'm going to actually show you to sell premium the correct way. First, okay, when we actually talk about selling premium and selling premium, if you will, the correct way, okay, allow me to introduce probably the most essential portion, okay, of selling premium. We're going to go out, right, and we're going to look at a product like the spiders, right, and the SPY is trading at what? Basically 470. I'm going to sell a bunch of stuff out here, and then I'm going to sell a bunch of stuff out here. Wait, what? This is calls. That's what I was talking about today. What about these guys over here, the puts? Bring on the puts, okay? But what's going to happen? If you just sell a bunch of calls and you sell a bunch of puts, then what do? Then you get down on your hands and knees and go, oh, option gods, please don't run me over, okay? That ain't going to work, because sooner or later, what's the market going to do? It's going to explode higher or it's going to take you out lower. Everybody knows that. And that's those of you that are experienced understand when I talk about the freight train that hits you, go, did anybody catch the license plate of that train? I'm like, trains don't have license plates. So like, exactly. But think about this for a second. You can't just go out there and sell naked, because those that are caught naked are, caught naked. It's not going to be a pleasant experience. Okay. So what we are going to do is introduce what we term, okay, the hedges. There are 1, 2, 3 aspects. These are absolutely unequivocally essential. You're going to have to understand a little bit of risk management to be able to do this effectively, a little bit, okay? And these hedges here, what are we talking about? The first one, we call it a risk twist spread. It's an RTS spread. The second one is a VIX vol spread. The third one is what we term gamma iron. Going to put the pen down for a second. Time out. Some people are looking at this. They go, I have no idea what a risk twist is. I have no idea what a gamma is. I got definitely no idea what a VIX volatility spread is. And this is exactly what I am going to explain to you, albeit briefly, okay? What I want you to understand, okay? What I want you to understand is, simply put, these are, again, what we term your hedges, all right? Let's go out and let's start to create a bit of what we term an options position. I'm going to actually set this up in the spiders. And we're just, today we'll talk about the VIX vol spread, because I think it's probably the most essential for you to use right now. So here's the SPY, okay? And again, the SPY, we're just going to estimate is trading right at around 470. So I'm going to go way out here, okay? And I'm going to sell me a 520 call, maybe collect $1, okay? Then I'm going to go way out here, and I'm also going to sell me, and in this case, it'll probably be like a 360 put. And that one I'm actually going to collect the whole $2 for. Then I'm going to come even further out. Before you know it, I'm actually going to sell, for instance, like a, let's turn around and sell like a 340 put. And before you know it, let's say the market rallies a little bit, and I'm going to sell, for instance, a 540 call. And I may even be able to layer in here and sell a 500 call. And before you know it, over here, I'm probably also going to sell a 380 put. I'll stop right there. I just sold 3 calls, and then I just sold 3 puts. And people look at this and they go, looks a little complicated. How long, okay, is it going to take? And I'm serious about this. How long is it going to take? All you got to do is go over to a trading application. And I know I've written on the screen here. So go over to trading application. Look, I sold one of these, okay? And then, you know, I was talking about those puts a second ago, and, you know, you think I'm crazy. You're like, oh man, you can sell that far out of the money, like the 360 puts, okay? Let me just show you what the 360 puts are really trading for. I knew they'd be somewhere. I put in $2. Now they're trading for closer to 3. I apologize, okay? Okay, you got to go all the way out to like these 340s, and they're still trading for more than $2. It's incredible right now. There's so much premium. It is ridiculous, okay? It'll take you 2 seconds to put on 3 calls and 3 puts. Anybody can sell option premium like that. You just sell a couple calls, sell a couple of puts. This is where somebody always comes in here. By the way, commissions, it's what, 65 cents, 65 cents, 65 cents, 65 cents, 65 cents, 65 cents. That's it. 65 cents. There ain't no commissions on there. Okay, and you know what? Most brokerage firms today, they're if they're not at free, they're close to free. So the commissions these days, nominal. Even in Canada. Canada, we got you taken care of too. But what happens right now if the marketplace were to rally huge or to crash? These, okay? And I'm going to actually look expressly right now at the VIX volatility spread. This is designed to mitigate your exposure if we come crashing down. What do we mean by that? Okay, let me ask you guys something. Let's say that the market right now rapidly sells off. Like today has been a rip your face off rally. But let's say towards the end of today, the marketplace really starts to tank. Okay, market's now spiraling out of control to the downside. What's going to happen to the VIX? Okay, when the market goes down, the VIX goes where? Up. It explodes. What happens if I placed a very, very small spread on the VIX? And what happens is if this marketplace comes crashing down, in fact, let me even change the color so it's a little easier to see this. If this marketplace comes just crashing down, okay, we're going to have a tiny little VIX trade packed right in here. Because what the VIX trade is going to do, it's going to puff up, okay, and save my life. Why? Because you know that I've actually sold out of the money options in here. Margin, if one more person comes in here to talk about margin, okay, you need not even discuss margin because the margin now is negligible. Any account, $2,000 accounts can do this now. Literally $2,000 accounts can do all of this. Structurally speaking, they can do all of it. But I want you to know, what am I doing with the VIX again? Okay, the VIX is there to actually protect me if we have a quick and ugly sell-off. Because what happens is this tiny little VIX trade, and everybody goes, what'd you pay for the VIX trade? Oh, I didn't pay anything for it. We can show you how to actually get the VIX trades for nothing, okay? The market comes down hard, the VIX explodes, and it explodes in premium. And what it does is it pads the landing, okay? You can still take losses in here, but they're going to be very, very minute. Why? Because you have a VIX volatility spread on. When do you have a VIX volatility spread on? Ooh, you always have a VIX volatility spread on. You drive a car, you have some form of insurance on that car. Okay. Yeah. You sell premium, you better have preemptive, okay, insurance, if you will, on the sale of the premium. Then you ask, how are you going to protect the upside? I'll tell you exactly how I'm going to protect the upside. The upside is by means of what we term right here, a gamma iron. We actually go out, okay, and we buy, okay, not sell, but we actually buy, if you will, a gamma iron. And what happens is if the market rallies, hits the iron, we buy it, hits the iron before it can actually impact any of these trades. So you have to cross through a profitable trade well before you could ever take losses. The design of the trade and the design of this is so that when the impact comes, it absorbs all of the impact, okay? And that point, you can either stay in the trades or actually even exit some of the trades. Again, nominal losses. All of the hedges that we do here are preemptive, okay? When I say preemptive, you don't just go out there and go like, I'm going to make money by selling stuff here and here, because sooner or later, you know, we're going to crash to the upside or we're going to fall flat on our face, okay? Instead of the marketplace just crashing to the downside, we're actually putting a hedge in place, which gives you a little bit of an umbrella over the risk. And I got to tell you, it's the downside that always scares me. Everybody's like, the market only rallies until it doesn't, okay? I'm telling you, you need to know how to do this, okay? This is why you want to sell premium. Premium can now be sold in very, very small accounts. You know, I put this in the $5,000 category, and I'm going to tell you why I put it at $5,000, because that is what it takes to sell premium in an IRA. And I'm going to tell you also, literally anybody can do this, any IRA, SEP IRA. In fact, I have one. In fact, you were looking at it a minute ago. This is the IRA, okay? It is an IRA right here. This is the margin held up in the IRA, right? It's nominal. And again, I have some positions on in here. I got a 3-lot, a 3-lot, a 3-lot, only tying up, okay? What, less than $6,000 a margin. And that's a bigger position. This produces positive decay, may enhance existing positions. You realize you could even sell options premium around existing positions, provides an incredibly high probability of success. You're never going to need to buy or sell the stock, okay? And you could be wrong on market direction. What I implore you to understand, all right? It doesn't matter what you think about the future of this marketplace. There's one reality, okay? There's inflation, okay? And behind that, there's the Fed. And the Fed, okay, is about to hit the accelerator right now on mopping up all the liquidity out there. We are going to be volatile. You are going to need another strategy other than just, I mean, right now, all people have to do is go out there and go, I bought stock and the market went up and I made money. Okay. This next decade, this is not going to be easy. This is not going to be easy trade. Moving forward, okay, you have been put on notice. Sell premium or forever hold your peace, because it is going to be incredibly hard. Like, to be a stock finder, think about trying to find stocks that go up if we start to head down. Like, again, the other day, there was nothing that was going up. And we had a marketplace that was in free fall the day after Thanksgiving. How many stocks were up that day? One at the end of the day. I mean, literally like 99 stocks out of the S&P 100 closed down. You can't be a stock picker because you're not going to find that one. You're not going to find the needle in the haystack, be a premium seller. It's just going to be so much easier. And that's why I say, and I'm dead serious right now. I've been talking about this through all of 2021. You're going to need this in your life. This year, we might be very close to all-time highs right now, okay? But nothing has changed. We are still volatile, and now we don't have the Fed on our back anymore, okay? The Fed is actually what? Going to be wind in our face at this point. They always say that notion, don't ever fight the Fed, okay? If you believe that, right now the Fed is against you. You're going to need this. Selling premium can potentially bring in really consistent returns. And at the same time, we're going to teach you to mitigate that risk. Minimizing risk is critical in this, okay? We're going to talk momentarily about criteria. Criteria is those nuts and bolts around this. Before I get there, though, I'm actually going to give you live trading examples. When I say live trading examples, variations of all the following trades. I'm actually going to show you my entire 2021 history, okay? I promise I'll go through it quickly. With the 2021 history, it's every single trade that I have done in terms of sell premium in what we term the Theo Theta portfolio. I'm going to say it again. It's every trade that I've done, no holds barred in the Theo Theta portfolio. Variations of every trade that I'm showing can be done with as little as $2,000 in a funded brokerage account. It can be done with as little as $5,000 in a retirement account, okay? I'm just going to start with this about a year ago, okay? When I say about a year ago, like literally this is almost a year ago, almost to the day. This is a Tesla short call. All I'm showing you here is like look, the opening of the position, the closing of the position. This is to open to close. And I started like a year ago, just simply to get you into the notion, like this is what selling premium looks like, the exact date and time, the opening trade, the closing trade, like what is this? Like when you look at it, this is the opening price, the closing price, and this is the return. I'm going to show you exactly what it is, okay? This is the Thinkorswim platform, okay? This is the account statement. If I go over and I look at Tesla, if I go over and look at Tesla, and I go, for instance, 360 days back, all right? You can see every trade that I've done. This is to open to close, to open to close. So there's the 950s right there to open, okay? There's the 950s to close. The exact opening price, 425, the exact closing price. All I did is took the screen and clipped it and put it into this PowerPoint, okay? This is selling premium over the last year. And I swear I'm just going to run through it really fast because it'll drive everybody crazy. I just want you to see, okay, the consistency of this. It's a Tesla short call. By the way, any questions in any of the trades, I'll actually bring up, okay? I believe in the absolute, okay, full Monty here. I show account statements. We show P&L. We show every single trade. Like, you know, hey, last 360 days in this one account, I traded 98 fills in the spiders, okay? You can see everything that I've done. What have I done in the IWM? 69 fills. What have I done in the QQQ? Okay, 70 fills. What have I done? And I can go through every single underlying and literally show you every single trade I've done, for better, for worse. Okay, we show everything. Tesla short call. This is me selling premium. Again, 83% return, 90% return on another Tesla short call. Another short call here, 58% return. Now timeout. All I did is threw Tesla up there just to give you a little feel of what you're actually looking at. Now we're going to run through a bunch quickly. This is a bond short put. People go, I don't even know what a bond is. Well, I started off at the beginning of the year, 57% return, 53% return, 62% return, IWM, 53% return, okay, 76% return. I jump back to Tesla over here. Oh, SPY short put, 60%, 50%, 51%. These are all short puts. SPY short call, 57%, 49%, 50%, 62%, 53%. By the way, I'll take the time. Time out. Here is, again, we're just moving from January into February, 53% return, 50% return, okay, 64% return, QQQ short call, 53%, 57%, okay, 56%. It's pretty boring, huh? Okay. By the way, somebody said, please explain, the trades are absolutely 100 days out. Just want to make that very, very clear. Trades are, look, that's a March 19th. Okay, and this is February, but the initiation was early February for the March expiration. Okay, so there's a window of opportunity, but yeah, no, that's going to vary a little bit. Okay, depends on volatility of the marketplace. So here we are, 54%. This one's a 19% loss, so it's a loser. Listen, that's going to happen from time to time. Okay, 19% loss. By the way, if you look at the IWM at the beginning of the year, this thing spiked. Okay, it took a little bit of a hit in the IWM, 54%. 52%, 49%, 47%. Okay, you can see, and again, somebody was asking about the time frame. Okay, look, it's March. I'm trading June. Okay, it's March, trading June. So absolutely, it depends on some of the volatility out there. QQQ short put, 49%, 51%. I'm back to the bonds, 50%, 54%. And again, I'm just cruising through very quickly. IWM bonds, IWM, all 50%, 52%, 53%. Bond short put, 73%, 56%, 52%, 50%. We're back to the IWM. By the way, are you bored yet? Because I'm all going spiders, QQQ, spiders, IWM bonds. Spiders, IWM bonds, QQQ. I just keep going back and forth. Oh, look, a Mo. Momo. What is Mo? Mo actually was Altria Group. Bond short put, 50%, 50%. Tesla short call. I'll throw Tesla in there. I think I should throw an Amazon in there once in a while. There's an Amazon, 63%, 50%, 53%. Okay, we're almost through half the year. Bond short put. I'm just in the spiders right now. Okay, time out. At this point, okay, this is a portfolio. What you're looking at right now, this is a portfolio, and everyone here at TheoTrade has access to this portfolio. So I started out at the beginning of the year selling premium, and I wanted to make sure that the clientele of TheoTrade were up to speed a little bit before I switched to a bigger product. I didn't spend 2 months in a smaller product, okay? I spent, what, almost 6 months. Now we're trading the ES. The ES is exactly 5 times the size of the spiders. So this is what we term an options on a futures contract. Okay. Now you're going to see here's a 50% return. Here's another one, 50% return, another one, 50%, 51%, QQQ, 51% in the ES. And again, I'm trading a lot of options and futures contracts. Fine. Everybody can do this. And you can do it in an IRA, 56%, 50%. Okay. I'm just ripping through trades over here. QQQ. All right. Here's one. This one, again, barely made any money, 31%. Okay. Timeout. Now we actually, again, what I tend to do is everybody can see this portfolio and we actually text the trades out to individuals. So at this point in time, okay, we had gotten through 6 months of the year. We took negligible loss like on one position. So what I did is I layered in, again, another level, if you will, of skill. This is what we call a Christmas tree spread. And the Christmas tree spread, it's a little bit of an advanced trade. But if you look at this on an 85% return, look at the size, if you will, of the credit here, okay? So I actually went out and sold that for $21 and bought it back for $3. If you're kind of curious what that amounts to, this is only literally a 1-unit trade. When I say a 1-unit trade, okay, it's the equivalency of like one contract. You make about $1,200 on this trade with an 85% return, if you're curious. That's with 1 unit. I mean, you could do 10 units, which, 10 units, you're making between $12,000 to $15,000 on this trade. And I have some of these on presently. In fact, if you're curious, and again, we don't, just talk about this crap. This is an inventory. Okay. Right now I say it's an inventory. Look, you see the exact contract size. You can see exactly what my trade price, everything I've opened, everything I've closed, right? Some of these trades are hedges. Like this one is down money. You're like, yeah, I want to be down on that one. Why do I want to be down on that one? Because if I'm down there, it's a good thing because it's the hedge, and the hedge, you want to lose money on a hedge. Everything else over here, like this one, this needs to be, considered to be closed. Okay. This is an inventory though. When I say inventory, looks confusing to people. Looks like a lot of trades. Okay. This inventory is making a few $100s a day just for being on. You just sit it there. You don't have to do anything. Okay. By the way, there is a 1-day trade in here. I apologize. I was actually trading on an intraday basis in this account too. But this is the Christmas tree trade. And what I was showing you a moment ago, there is actually a Christmas tree trade in here. Okay. It's actually packed in there. It's the holidays. You put a Christmas tree trade on. Okay. So again, I amplified what we're doing to the next degree. Here's QQQ 57%, TLT 53%, 55%, 19%, ES 57%, 50%, 54%, 50%, 52%, okay, 49%, 58%, 63%, and another Christmas tree trade for a 92% return. I haven't updated everything for November yet, and obviously December we're in right now, okay? But I'm going to tell you, that is all of the trades I've done through the October expiration. Again, this is all the trades that I've done through October. I'll actually reconcile everything from November. I'll reconcile everything from December. This is a portfolio that, again, everyone has access to, okay? This is the time to learn this skill set. You got to learn this skill set before the market completely changes tempo. And it is in the midst right now of starting to change tempo. And I stress that to each and every one of you. If you're still working, this is really part-time stuff. Nothing I'm talking about here is going to be wildly time consuming. If you're quarantined, and I know people see that on the screen, like, yeah, quarantines are done. Yeah, they're done until they're not done. Depends on what part of the world you live in. But it's a great way to actually emerge stronger and in better financial shape. And, most people are still working from home. If you are working from home, fantastic. I mean, when are you ever going to have time like this again? Sooner or later, they're going to call people back to offices and, you'd still be able to trade there, but this is the time to actually learn the skill set where you do have the ability to look at your computer throughout the course of the day. What our members are saying. This comes from Kevin Burks. I absolutely love this freaking website, TheoTrade. There's so much here, so many different flavors. I cannot pull away for more than 15 minutes, cannot get any work done. By the way, that's why I put this in here, because I thought it was hysterical. Couldn't get any work done. I could go on, but there's a short that I'm waiting on. Anyway, Stefan said, I really think Theo is the best educational money I ever spent. Listen, again, not a lot of time, not a lot of problem. Every single trade that I showed here today was displayed live at TheoTrade. We send text messages, we send push notifications. The trade results, though, are designed for part-timers. Selling premium is a skill set. Okay, but once you understand the construct of it, it's set and forget. It's just order types you put on. Even a fraction of your time is going to be enough to see good results. Like, I don't want anybody to think you're going to have to be glued to the screen. Some characteristics of selling premium. Okay, high probability trading is undeniable. You're never going to buy or sell the stock. Risk is tailored to precisely your comfort level. And I make that express comment over there because you can literally fine tune this. How many VIX spreads do I want? How many gamma irons? What's the hedge going to be? You're never going to use a stop order. You can vary time frames, okay, and that'll help minimize risks. The probability of profitability is incredibly high. It's a perfect strategy. If you do have a stock portfolio, we actually can teach you to harness this around a stock portfolio. Okay, it's the perfect strategy for that too. If you still own, like a 401k, you're thinking your 401k, I can't touch that. You don't have to. You could actually trade options in one account against the 401k. Why not? What else is your 401k doing? You're like, money's good for nothing over there. It's just sitting there. People have, the life savings tied up in the marketplace. One bad day in this marketplace wipes out the savings. Okay, go out and sell some premium against it. It's an excellent tool. Also, for those seeking returns to be able to build a smaller account. Okay, and new products, you can sell options in basically any account size. And I've been stressing that, all right? Do not let the options portion of this, though, intimidate you, because we have to teach you how to build a little bit of an options portfolio, okay? Selling premium can be done for very minimal credits and very, very minimal risk. However, the sale of premium, though, it's like a massive power saw. You got to learn to do this right. And I always make these analogies. You're going to go out and build a house. If you're going to build a house, you'd probably want to use some type of like a table saw. But if you don't know how to use a table saw correctly, probably lop off a couple of fingers. Options can be the exact same thing. Options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market. But if you don't know how to use, the options correctly, you're going to lop off a couple of fingers. Like, options are that power saw of the marketplace. You can sell premium and you can sell Ultima premium and minimize risk. Even if you have, again, limited options knowledge, don't let that part again intimidate you. It takes us a couple of hours to get you up to speed, but you're going to need, something other than buy and hold or something other than buy and pray. You're going to need these strategies for the foreseeable market future. That's one reality that I don't think has hit home for most people. What's it going to take? Is it going to take the Fed next week, saying we're going to accelerate the the tapering of the bond portfolio? The market goes into a tantrum. The market does not want to hear that it's not getting free money anymore. What? No more free money? Listen, we can show you how to do this, right? We can show you how to do it in a couple of hours. But TheoTrade, what we're really about is creating detailed recipes for every strategy, including selling Ultima premium. And it's literally like, when I say, it's a detailed recipe, you wouldn't bake a cake without a recipe. Why trade without one? That's what most people do. This is what you need to know to successfully sell Ultima premium for a living, okay? What underlying stocks, indices make the best Ultima premium selling candidates? Like, when you guys think about it, if you're going to run out right now and you were going to start selling premium, where would you do it? Okay, where was it? Where are you going to do it? You saw me do it in the spiders. You saw me do an IWM. There are a little Tesla in there, okay? You have to know exactly what the candidates are going to look like, okay? The candidates, honestly, are easy. You have those. When I say you have those, you just saw me do spiders. You saw me do IWM, the QQQ, S&P, maybe a couple of bonds over there. You have the candidates. And I know people are writing it down. What you really have to know is, what volatility should you seek out? If the volatility is too high, you can't do the trade. If the volatility is too low, you can't do the trade. There's actually a window of opportunity on every single product. That's why somebody was asking, they're like, hey, your time frame varied a little bit. It did. The time frame varies predicated upon the volatility, right? So we actually have a sliding scale. And it's really easy when you say, like, you're like, oh, that sounds complicated. You know what? You're reading a little recipe to be able to bake a cake. Step 1, lots of flour. Step 2, lots of sugar. Step 3, measure this, dump it in here, oil. Okay. That's all we do here. That's all we do. We just build like a very detailed recipe. And you go, I even know what volatility is. The recipe shows you what volatility is. I'm not even sure what a candidate means. Okay, well, the candidate is the spiders. It actually shows you what that is, what the volatility you should seek out. What expiration do I select? You know, the crazy thing about option expirations, check this out. When we talk about options these days, like go look, want to see something crazy? Go look at the SPX, the mother of all products. But if you look at the SPX, there's 1, 3, 6, 8, 9, 10, 13 set hike. Like look how many different expiration cycles there are. Okay, you realize you have to be able to zero in on exactly what expiration cycle to use, exactly which one to use. Okay, so we zero in on that for you. We zero in on what the volatility should be. Okay, what should be the delta of the option you sell? That has to do with probability. You don't even know what delta is. That's fine. We explain all of that. What options do I buy against my position? That's the hedges. Okay, do I just go out there and sell them naked? Oh, I'm worried about the margin. I said, don't worry about the margin. The margin is nominal. You just have to know how to do this properly. Okay, we'll teach you what options to sell. We'll teach you what probability to be in. We'll teach you what options to buy against the position. We'll teach you actually how to build the position. When I say build the position, you know, it looked nice. A little distribution curve, sell a couple here, sell a couple here, throw a hedge in here, throw a hedge in here. We're good. It doesn't take that long to learn how to do this. Do we need a large amount of capital? Absolutely not. $2,000 in a standard margin account, $5,000 in an IRA account. What is the right amount of risk for you? Not only do we actually go through and teach you how to actually structure a position, but we have an entire risk analysis section. Okay, and the risk analysis has to do with what's termed a risk array. So we can actually dial in the right amount of risk specifically for your account size. We also give you the what are the percentage returns supposed to be. By the way, what'd you guys see for the most frequent percentage return? When I ran you through all those trades for 2021, what was the most frequent percentage return that you saw in there? It's about 50%. I'm just going to cut to the chase. About 50%. It is about 50%. Okay. How do I protect myself from market crashes when selling options? Fixed volatility spreads, risk twist spreads. If you do not understand this, okay, when the market goes down, the VIX goes up, right? That is what is actually going to save your bacon. So you're selling options over here and you're hedging them in a separate product over here. Why do we do that? Okay, it's what we actually call like a cross market. We do that because in one side, there's so much premium to sell. On the other side, it's actually a very cheap hedge to place. You know, if you guys ever done this, like you call around to like 6 different places to figure out car insurance. Why do you do that? Because you're looking for a cheaper place to hedge off your car. That's it. You're just doing the same thing. That's why we teach like VIX volatility spreads, because it's cheaper to hedge in that particular product. Okay. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Okay. In trading, what you learn is it's all about answering what ifs. What might be a good, stock or ETF candidate for you to sell premium? What's the correct option expiration cycle, to be able to sell? And how much capital do I commit to generating premium? What strike price options do I sell? How many do I buy? Can I limit my risk? We have those answers. Okay. We build recipes with definitive criteria. They're literally checklists for each unique strategy and each unique variable that you're going to encounter. By the way, the word checklist in here, and I put that in parentheses, the whole logic behind how we actually structure our criteria stems from me sitting on a lot of aircraft. When I worked at Thinkorswim and TD Ameritrade, I flew all over the world, literally all over the world. And I'd sit in the aircraft and I'd actually watch the pilot, before taking off, the pilot sitting there going through a detailed checklist. The way I've been flying long enough that I remember when they're actually still doing it by hand. Now they have like iPads and so forth, the iPad checklist. But these pilots go through like a literal checklist before they take off. They don't just hop into the, Boeing 737, throttle up and just, we're off, yoo-hoo! They sit there, okay, for a few minutes. I mean, they even walk around the aircraft, and some of them are like grabbing on the engines and shaking on them. I always remember that. I love that part of the checklist, okay, because it makes me feel warm and fuzzy that if this gentleman's out there like shaking the engine, well, if he couldn't pull it off going 400 miles an hour, it definitely won't. Anyway, don't worry about that. But these checklists, the design implication was not only to be able to get you into a trade, but the checklist, okay, it's a pre-flight and gets you into the trade. But then once you're in the trade, what if the market goes up? What if the market goes down? What if the market tanks? What if we're coming close to expiration? What if a dividend is approaching? What if expiration is a crazy time and I don't even know what to do? Every unique variable There's a flow chart in here. If we go up, okay, if we go up big, if we go down big, there's a flow chart and it actually takes you through each unique variable. What if, because trading is all about answering the questions. The right probability, how many option contracts, when do I close the premium sell? What if we sell off big? Do you bail out of the trade? What if we rally? Can I fix a losing trade? It all becomes like how, when, why, at what price? And I'm telling you right now, it is just the beginning of the variables that you're going to face while selling Ultima options for a living. Listen, you can read what selling Ultima Premium is. Okay, right now I'm serious. You can go Google, like people do this. Like, oh, I'm going to go Google and I'm going to learn to sell premium Google. Okay, maybe even how to build a couple of trades. But I'm going to tell you right now, when you Google selling premium, it'll talk about selling premium all day long. Okay, it'll tell you sell an option, but it doesn't tell you is criteria. It doesn't tell you what to do. Okay, other than if you sell an option, you can buy it back. Silence. Okay. Yeah, if you sell an option, you can buy it back. How are you going to hedge that? Selling completely naked is insane. Okay. Risk mitigation is everything in this, because what we want to do is make money. And when that freight train comes, you go, stop. Okay. Because we have a preemptive hedge in there. Okay. What you need to know to be able to sell premium is what we do here at TheoTrade. Okay. You need our recipe for success. 20 plus years of trading experience. That's just me. There are 7 other full-time instructors here. Everyone here at TheoTrade has a minimum of 15 years of experience. Our instructors have a minimum of 15 years of experience in this business. I personally had access to client order flow for 15 years and have viewed and studied millions of trading accounts. Okay. I mean, I ran, again, Thinkorswim and TD Ameritrade's education division for 15 years. Realized while I was there, we took the Barron's Award for 4 consecutive years. We took the #1 brokerage for 4 consecutive years. Okay. And a big portion of that was the education division, if you will, inside of Thinkorswim. All of this accumulates, okay, to the criteria. All of it accumulates to building successful criteria. Criteria is your recipe for success. The following strategy, which is selling Ultima Premium, and the corresponding criteria requires the utmost attention to detail. We spent literally years, okay? And I say we, it's not just, again, myself here at TheoTrade. As I said, there's 7 other full-time instructors, many of which actually came from the Thinkorswim TD Ameritrade world to join us here at TheoTrade, okay? We spent years fine-tuning the trade setup. We spent years fine-tuning the criteria. When you approach the section on criteria, you follow the steps to build the trade. We built a 5-hour course expressly on this, okay? The 5-hour course is archived, available immediately. I put it together. Before anybody is concerned, we do not go out and sell a la carte classes anymore. Everybody looks at this like, oh, there it is. It's another $500 class. That's not what we're here to do anymore. This is where people really want to tune in. This is where you really want to pay attention. The Ultimate Income Generator course, okay? I'm the trade instructor for it. We put together a 5-hour course. Now, we also have, okay, in addition to this, and provide to you every, okay, course that you will need to get ramped up, okay, to this level, if you need it. If you've never traded an option before, right? There's a couple prerequisites maybe to go out there. You don't want to just run out there and go, you know, I'm sprung from the womb and I know how to sell options premium, okay? We get you ramped up. Before I go any further though, again, there's a 5-hour course, it's archived, it's available immediately. We just recorded the session, we clean up the session, okay? We archive it and we stream it, and it streams on our website 24/7. It streams on a mobile device, okay? Depending upon what mobile device you're on. We have an application that we built for iPhone. We have an application that we built for Android. It works on an iPad, okay? Any Android device, any Apple device, it'll work. Okay, and then you can actually download onto your mobile device and stream while you're offline. The class slide deck. So with this course, we're not just streaming you something. With the course, there's a PDF file. It's a slide deck. And that gives you all the unique criteria, all the entry criteria, all the exit criteria. Now, before I go any further, I want to elaborate on one of the statements that I made a moment ago is, okay, we do not go out and sell a la carte course, a la carte classes for $500. I do realize that many of you tuning in today have taken a class, and they go out there and they charge you $500 for the class. And then eventually they charge you $500 for an indicator that goes with the class. And they teach you, what? You have to pay $500 to learn to use the indicator for the original class. And before you know it, this is obsolete. And then they charge you $500 for a new class. It's not what we do here at TheoTrade. Okay. One thing I want to make very, very clear before we go any further. Okay. TheoTrade will support you in every way, shape, or form, right? To the point where you can go through this particular class. And I'll get to the price in a minute. Okay. Because I'll tell you right now, you can go out and you can spend $30,000 in education. That'll just absolutely pale in comparison to what we do here at TheoTrade. Literally, you could spend 30 grand in education. Okay. We know at TD Ameritrade, we had a course that was, and some of you will remember this, there was a course that was 18 months long at TD Ameritrade. That course had a price tag of $24,000. The gentleman that put together the entire course manual, which is again, 18 months course curriculum. Okay, anybody remember what I'm talking about? That gentleman is Brandon Chapman, and he works here at TheoTrade. Why? Because he puts together a lot of our materials. He's absolutely phenomenal. Brandon's one of the instructors here at TheoTrade. Okay, we have Jeff Bierman here, and I'll go through all the instructors momentarily. What I want you to understand about TheoTrade, you can go through this course, you can email us, you can bounce trade ideas off of us. Okay, we don't run away from that. Again, we have over 6,000 active clients on the TheoTrade platform at this point, meaning that we have 6,000 individuals that are watching trades, 6,000 individuals that have access to this class, 6,000 individuals that have access to everything, to our support staff. Okay, what we do here is extremely unique. Okay, in the education sector, I watched for years from behind Thinkorswim and TD Ameritrade. I watched all these educators go out there. All educators do is they sell you crap classes, then they sell you more indicators. What we do here at TheoTrade, okay, it's what I kind of like, it's all inclusive. Anything that you're going to need, right, to survive and more importantly, thrive in this business, we will give it to you, okay? And if that includes like, you can email me. Anytime you can email me. I answer the email. People are always shocked by that too. How can you answer that many emails? How long does it answer? How long does it take to answer 30, 40 emails? Okay. What, a few hours? The busiest days, like last week, we were rocking last week. I had about 130, 140 emails in a particular day. It took like 4.5 hours. It's nothing. Okay. That's our business here. This is what we do. Okay. And we trade. And all of the trades that we're talking about, we put on. I'm actually going to take you through what comes with the Ultimate Income Generator course. But I'm going to tell you more about like what we actually do here at TheoTrade. So bear with me, because again, if you look at this and you say, oh, it's another $500 course, it's not. Okay? That's not what we do, right? We support you every single step of the way. All right, hang with me for a moment. The Ultimate Income Generator course curriculum. So you're going to learn how to generate consistent returns selling options premium. The curriculum, when I say the curriculum, what does the course actually cover? How to build a portfolio of high probability trades, okay? And we're there to generate, obviously, monthly returns, regardless if you're starting capital or experience. We're gonna have detailed entry and exit criteria. I mean, again, that's why people come here. For selling options premium, you need that detailed entry and exit criteria while keeping risk at a minimum. You're going to actually discover option Greeks. We're going to talk a little about delta, a little theta, a little volatility, and learn how to manage all your positions through one easy number. Okay. Then we're actually going to get into the course using the risk array. That's like my favorite section in the course. Okay. You're going to be able to visualize risk into the forward future, meaning that you're never going to be surprised how much you can make or how much you can lose. The market, no matter how much it moves, you're going to be ahead of the game. It's like playing a game of chess, except you can see 5 moves into the future. That's what we do over there. Then we're going to teach you how to probably allocate. Okay, allocation is critical. It's like the underdog. Nobody wants to ever talk about allocation. What does this mean? Okay, this means put too much money into one trade and you're already dead. We're actually going to teach you to allocate to reduce risk. Okay, in that portfolio, really, really hands off. You're also going to discover risk. Okay, mitigation techniques. This is the risk twist spread. This is the VIX volatility spread. So you're never going to be caught off guard. Okay, and you're going to learn how to sell premium in small accounts. Okay, there's an entire subsection in this course that teaches you how to do this in a retirement account, how to do it in a smaller account. On the flip side of that, we also do talk about some of the larger accounts out there. Sorry, I'm reading some of the questions as they come in. Okay, That's the curriculum for the 5 hours. Now, before I go any further, because I'm going to explain what TheoTrade is, okay, know this. TheoTrade's completely riskless trade. There's a 90-day money back guarantee, right? If you're not satisfied anytime in the next 90 days, right, you'll be able to enroll for this in a moment. If you're not happy anytime in the next 90 days, just email us. You do not call us. You don't have to do a little song and dance. You don't have to like send us blood. Like this is not like a gym membership. We don't do that. We don't even do, okay? We do not do membership anymore. All right. We did when we first started. We learned. Nobody likes membership. Nobody likes like, it billed me again. It billed me again. It's not what we do here. If you're not satisfied anytime in the next 90 days, just email us, give a full refund. No questions asked, please. There are no stipulations to the money back guarantee. You want to be here? We want you here. We have over 6,000 people here. We want people here at TheoTrade that want to be here. There's no excuses. There's no questions. There's no commentary. As I said, just email us. If you're not happy, email us, ask for your money back, and we'll give it to you. It's that easy. If you go right now to theotrade.com/skew, you can enroll for it. And I'm going to tell you what comes with it here momentarily, because people are like, kind of tuning into this. And here, if you're kind of curious, this is TheoTrade. When I say this is TheoTrade, this is actually the site. So, and the site's live right now. By live, I mean, we stream to you all day long. This is all part of TheoTrade, okay? This is actually a live room there's a live instructor in there right now. And that live instructor over here he is, okay? So this is Brandon. These are actually clients talking to one another in here. And any given day, there's a few thousand individuals inside that room, okay? If you go right now to theotrade.com/skew, okay? I'll just throw it up here, theotrade.com/skew. It's S as in Sam, K as in kick, E as in echo, W. You can enroll for it. You just click add to cart. And the reason I throw that up there right now, okay, is simply in respect to the fact that, listen, you want to enroll, fantastic. It's a 90-day money back guarantee. There's just no if, and, or but about it. Now, I'm actually going to show you what we include, because everybody's like, oh, I want a bonus, okay? We go a lot beyond like an indicator or a class, or, we're not about selling one class. Right now, there's no question. You want to learn to sell premium. You're coming here to TheoTrade initially to learn to sell premium, but we do a lot more, okay? Like we understand that, you want everything to trade. You want everything to invest, okay? You want it at one place and one price, and that's exactly what we do. The first bonus we give you is a quick start beginner's guide. If you've never put on a trade before, there's an entire beginner's guide. There's a series of classes that you go through. If you're kind of curious, it's called Start Here, okay? Options 101. Options 201, options 301, okay? I argue this. Some of you are going to come here, pay the admission price. You can watch one of these courses in here. You're going to be blown away, okay? No one ever comes through here and goes like, oh, that was not enough, right? Listen, for a few $100, would you rather be overwhelmed or underwhelmed? Because I'm going to tell you right now, I would put this up against any $30,000 courses out there. People spend years trying to learn this stuff. It's just compressed into, again, very, very finite classes. So this is to get you guys ramped up. So there's a start here menu, right? Quick start beginner's guide. If you need that training, okay, give you the training. It's going to take you from completely newbie to entering the first trade. Bonus number 2, we give you over 100 trading classes. You go, what do you mean? How do you give me 100 trading classes? TheoTrade launched in 2016. And when we launched in 2016, okay, we had a lot to say. I think that that's an understatement, okay? You realize that in 2016, I already had 15 years of experience on the brokerage side of the business, several years of market making experience, okay? I had so many classes coming out of me. So I was like, we should just build this into like, all you can eat. And it is, all right? All you can eat. Buffets, those are gone these days. Not here. You can come in here and watch as many classes as you want. Like what classes? Guide to small account growth, in-out spreads. And again, you're coming here to learn to sell premium. That's the ultimate income generator. Okay. These other courses, they're essential. Black book spreads, collect income being short, risk twist spreads, iron condors, day trading. We have day trading. Every genre of trade that you could possibly imagine is located here. In fact, you know what? I hate taking people through this. Let me show you exactly what it looks like. So here is the TheoTrade site. Again, here's the TheoTrade site. Here's the archives. This is TheoTrade classes. It's the archives. We're broken into different genres: options, option newbies, technical analysis. What? I don't look at chart much. I'm a quant. Okay. We went out and hired the best market technicians that we could find, period, bar none. They're the best in the industry. Futures, stocks, day trading classes, hedging classes, trend trading, pairs trading. We even have, okay, an onboard psychologist, which I'll talk about here momentarily. But if you're curious, like what's in here, go ahead, let's click on it. Okay. Here's the income accelerator class. Here's the Ultima income generator, tracking unusual options activity, gamma irons, right? Back spreads, right? Guide to small account growth with in-out spreads, selling options for a living. It never stops. This is just the archive for options. Why? Because I'm a total and complete geek, right? There's nothing in this business that we don't have right here at TheoTrade, okay? That's bonus number 2. We're not even done by a long shot. Bonus 3, we give you 3 months access to TheoStream. What is it? It's a live trading room, okay? I just showed it to you a moment ago. This trading room has full DVR functionality. Everything is recorded. You can rewind, you can fast forward. I mean, we can go live right now. You want to see what it looks like live?
Build some watch lists around certain types of
He's
companies.
live right now. Like this is the chat room, and he's literally, when I say live, like it's live. Okay. And there's questions being asked here by, individuals. Okay. It's fantastic. That is what TheoStream does. But TheoStream, people go, how often does it stream? It's over 6 hours a day. We stream all day. Not everybody can watch this all day. So we do text of trades and we do push notification of trades. What's push notification? We have a mobile device. On our mobile device, okay, we can actually push out trades to the mobile device. So if you're not in the US or you don't get text messages, don't worry about it. We've got push notification. We have 5 different trading portfolios that you can follow. We have daily coaching sessions. That's continued education. We have a professor of finance from DePaul University that actually teaches the coaching sessions. His name is Jeff Bierman. Jeff also worked, okay, at Thinkorswim TD Ameritrade. And the instructors directly answer your trading questions. And I'm serious about this. I ask you, how much is that worth alone? There's a lot of places out there, they'll charge you $500 a month just to go into their chat room. Okay. We don't do that here. That's why we have over 6,000 clientele. Okay. Everything's inclusive. We give you every class. Okay. We give everything, the biggest start guide. Right. Bonus number 3, we're actually giving you our chat room with real-time trades. By the way, we trade all the trades that I was showing you a moment ago here in Tastyworks. Okay. You can have the same exact inventory as me. You go, but I don't understand. It's all right. You will. You will. I'm confident. Why? Because we put trades on. We take them off. We text you out those trades. Right? It's another $1,000 plus of support. I put huge value on the fact that you can email us. And I do. I put huge value on that. Why? No one else in this industry does that. You can't call up Charles Schwab, ask Chuck. Notice they don't do that anymore. Why? Because you can't talk to nobody. Okay. Chuck ain't going to answer the phone for an hour and a half. Call up any brokerage firm lately. You can't even get a hold of them. We're going to return your emails. Okay. Because it is what it is today. And this is it. We're your support. Here's the instructors. We have Jeff Bierman, who also, again, he's a professor of finance at DePaul University in Chicago. He also built most of the Thinkorswim charts. Matt Williamson's our market neutral premium selling option strategist. Corey Rosenblum is also a CMT, senior strategist and resident swing trader. This is a short-term trader. Brandon Chapman worked with us at Thinkorswim TD Ameritrade, again, a CMT. Okay, he wrote a book that was this $24,000 program. He'll tell you right now, what we do here, again, at TheoTrade is it just everything else pales in comparison when you look at the scope of what we can offer and the support we can offer. We also have Steve Slim Miller, 43-year veteran. Okay, he's actually not just a futures trader and options trader, he's also our in-house psychologist. Tony Rago. Tony does nothing but trades intraday. He's in, he's out, he's in, he's out. He just trades NASDAQ futures. Last but not least, Blake Young, market profile, futures, currency, and commodity trader. Blake also worked at Thinkorswim TD Ameritrade for many, many years. I think I've known Blake for about 15 years now. I was really thrilled to get him. He's been on board now for about 2 years here at TheoTrade. This is all of us kind of working remotely now, okay? On top of this, you get access to every indicator and scan that we built, everything that we build. We don't hold back and say, like, you got to pay $500 more for this indicator. We give you every indicator from day one. I use gravity points. I use Quantix. I use NQ levels. Okay. SPX expected move. And by the way, I'm going to give you the auto expected move here momentarily. Okay. Again, it's another $1,800 indicators and scans. Number 4, the Theo Theta Live portfolio. This is what I was talking about. All those trades that I was running through. Look, those trades are kept on a spreadsheet. You can see everything I'm doing. When I say the trades are kept on the spreadsheet, you can see my trades. They're right on a spreadsheet. Okay. And we actually can fire them out. So this is no holds barred. This is the Ultima class turned live portfolio. And we call it the Theo Theta Live portfolio. It's full disclosure on all trades, opening, closing, hedging. You get to watch me. Not only do I put the trades on, but I talk about them. We even do a weekly update video, which I'll talk about here momentarily. Anyway, this portfolio, this Theo Theta portfolio, okay, is for bigger accounts. We also have Theo Theta small portfolio for smaller accounts. Okay, when I say small accounts, $2,000 and up. Okay, the bigger portfolio is like 50 grand and up. Okay, you can go up to millions. No problem whatsoever, because I do fire some trades off in there. But I want you guys to know, like, there's no hold barred. Like, we're not just here like talking about trading every single day. We trade and we fire those trades out to you. It's Theo Theta Live. Okay, this is what the portfolio looks like. We also do weekly updates. If you can't watch TheoTrade, it's fine. 12-minute video that's recorded every Friday. Okay, and we get it out pretty early on a Friday. It'll update you on everything that we're doing. And these trades are not like, oh, I got to get in, I got to get out, I got to get in. Listen, no problem. Okay, we'll get you in, we'll get you out. Bonus number 5, technical analysis toolkit. We have an entire technical analysis genre. Tech 101, Tech 201, MACD, timing-based tradings, pattern recognition. There's 21 other classes in addition. Number 6, day trading treasure chest. If you're into day trading, we'll teach you NASDAQ futures, ES blueprint, consistent intraday strategies and setups. There's 11 other classes in addition to this. Bonus number 7, mindset mastery. This is one, and I'm serious about this. Write this down. The 5 essential building blocks to successful trading with Steve Miller. Everybody forgets about this class, and I am going to tell you right now, that class, for what you will pay for this class is worth thousands. Okay, I've known Slim Miller since I'm a kid. Again, I grew up around traders, so I've literally known this guy since I'm a kid. You want to hear what this man, okay, has to say. Slim Miller has not only been in the business, okay, for over 43 years. There was a period in the 1980s. We're going back to the 80s here for a real reason, and that's he was making or losing 7 figures a day back in the 1980s. Think that's not the person to teach you psychology of the marketplace? Phenomenal. Change, again, I spent 20 years in the business before I actually listened to this class. Still changed the way, change everything. Okay, guys, incredible. I'm telling you, watch this class. This class is worth the cost of admission alone. Okay, most of you that are a little experienced in here, okay, are going to probably write to me like the class is phenomenal. Anyway, I'm serious about that. Bonus number 7, 5 essential building blocks, successful trading with Slim Miller. You can even email us after enrolling today. You can email us and I'll even send you a link to it. Bonus number 8, quick start guide to Ultima trades. Some of you have experience. You don't want to take a lot of time to get up and selling premium. You don't want to even spend the 5 hours. So what we built is like, it's like opening up a new piece of technology. The new piece of technology is a quick start guide. We built a PDF that's a quick start guide. It's like a Cliff Note version of the criteria in here. What our members are saying, this comes from Jeremiah. My first 4 trades following exactly the details in your Ultima class just closed out using GTC. That's good till canceled orders set right after getting into the trade. This paid for your entire class in less than a week. I'm very thankful that I subscribe to your services. Keep up the good work, from Jeremiah. We include here at TheoTrade everything you're going to need to trade and invest. We have classes, coaching, email access to the instructors, live trading room, live trades, indicators and scans, mobile access, everything. Okay. We built the Netflix for traders, every genre of trade. Like when you log into TheoTrade, okay, as I say, I think you'd rather be overwhelmed than underwhelmed. It's $297 for 3 months. That's it. It's $297 for 3 months. By the way, that has a money back guarantee on it. And I'll throw all of this in for a second, so you guys understand, like when I say throw all of it in context, okay, it's $297 for 3 months. This is not an introductory price. By the way, the other aspect is this is not a membership. We do not auto renew. Let's say that again. We do not auto renew. We do not believe in that. After everybody always asks, after 3 months, how much is it? It's 297 bucks. You go, after 3 months, how much is it? It's 297 bucks. What else do you want? It's 297 bucks. Okay. Is there any discount? Yeah, it's 297 bucks. Okay. We don't do, games. We don't do any of that. It's 297 bucks for 3 months. Why? Okay. Because we can give you everything. It's all encompassing. And if you're not happy anytime in the 3 months, don't worry about it. We'll give you your money back. Okay. And I'm dead serious about this. It's 297 bucks. Like, oh, it's still my heart. We have over 6,000 members here. To give you your money back, like, we want to make sure that you're happy. We don't want anybody here out of 6,000 plus people that are here. We don't want anybody here that doesn't want to be here. You get everything, the Ultimate Income Generator course, access to over another 100 plus classes. There's new monthly classes. I left this in here the other day. Okay. We just did the candlestick trend trading system with Blake Young. We just did it 2 weeks ago. You are going to love that class. It's brand new. It's like fresh off the presses. Okay. We just archived that, but pretty much on a monthly basis, we have a new class. How do you think we got up to over 100 classes? Okay. There's 8 full-time instructors, including myself. So we're always rotating through. Okay. It's not that hard when you have 8 people. All right. What do? We generate just over like 1.2 classes, a year. It's not tough for us. Live trading room that we broadcast, 59 proprietary indicators and scans, text, and push notification, coaching sessions. You get to email us. Go to TheoTrade.com/skew. I want to reiterate, there's a money back guarantee. Anytime in the next 90 days, okay, if you're not thrilled with us, just please ask for the money back. All right. Again, a lot of firms, like they do a little dance, make a little love to get down tonight to be able to get out of this. Just email us. Okay. It's 297 bucks. The funny thing is about TheoTrade, life circumstances come up. Something happens in the next 90 days. You can't tune in. Like, we get it. Okay. We don't want to hold anybody hostage. Here's whatever. And after 3 months, right? It's funny. Somebody will get their money back and be like, I couldn't do it this 3 months. They'll come back. People will take off the summer. They went on vacation. They'll come back. Everybody does. Everybody does. Because you're going to find out real quick in this industry, there is nothing else out there, okay, that's even close. Again, you could spend $30,000. You're not going to find education like you will here at TheoTrade. By the way, if you receive a refund, there's no excuses, no questions, no commentary. Okay. By the way, I appreciate if you want to tell me, like, hey, I got sick. We had a couple of people, that have gotten sick. A lot of people have gotten sick recently. And, it's funny. Some people a little bit more minor in terms of having gotten sick that actually sit there and stream all day. Others a little bit more severe. Okay. Listen, we get it. Again, life circumstances get in the way. But if you do receive a refund, you get the the whole quick start guide there for us. That bonus, which is to get you started, the whole getting started, that bonus is on us. You get to keep bonus number one for free. Get into TheoTrade now. We're going to work with you directly. Okay. There are 30 spots on the riskless trade deal. Now, we do this to incentivize people, obviously, to enroll. Okay. We also do this because we do unlimited email mentoring. What I'm saying is we have almost 1,000 people, okay, logged on live today. And we'll give the first 30 people completely riskless trade. And that means you can sign up, cancel anytime in the next 90 days. The first 30 people to enroll today, obviously get the riskless trade deal. And again, we give you unlimited email mentoring, it's critically important. Anytime you want to email us, anytime you want to reach out, I encourage it. Okay. Send us your trades, bounce out trade ideas off of us. We don't shy away from that. The $297 riskless offer has never been available before with Ultimate Trades, the Ultimate Income Generator class, plus live Theo Theta portfolio. And there's a no stipulations money back guarantee. Okay. What our members are saying, closed year-to-date profit on Ultimate Trades. It's paid for my yearly TheoTrade subscription. Okay. You know what? I'm going to jump over to the site right now and make sure that everybody's on par. This is, again, right here. Okay. Bear with me momentarily as I pull up the site. It's theotrade.com/skew. Again, theotrade.com/skew. If you cruise over to the site, there are 30 riskless spots available. Click add to cart. Again, it's 297 bucks. Just click add to cart. The reason I'm going through this really quick, name, last name, email. One of the critical things in here, okay, please put your phone number. The reason is putting your phone number in here in the initial enrollment gets you into the text messaging without us having to manual enter that in later. So put your phone number in there. The other aspect that I hadn't mentioned yet, you can break payments up. We don't care. If you want to do $297 or a couple payments of 149, or a couple more payments of $100 a month, it's fine. All right, but know that there's a complete money back guarantee, regardless if you do 300 or 149 or 100. There's a money back guarantee on it, and that's probably the most important thing to us over there. With that, at the bottom of this page, the auto expected move indicator for Thinkorswim is also found. Okay, so again, all you have to do to enroll is click add to cart. Again, there's a couple of people that are asking the site name. Again, it's TheoTrade.com/S as in Sam, K as in kick, E as in echo, W. So it's TheoTrade.com/skew. Answer a couple more questions in here. This is everything that you get today for $297. Ultimate income generator, quick start guide, 100 trading classes. You get access to the chat room, which has obviously the live portfolios, the Theo Theta live portfolio. Whoops. Okay. The Theo Theta live portfolio, technical analysis toolkit, day trading treasure chest, the mindset mastery. This one, again, I put a lot of stock into Steve Miller. This one actually includes the 5 essential building blocks, successful trading, and of course, the quick start guide to Ultima. All right. As I said, TheoTrade.com/skew. Just go to that link to grab the auto expected move indicator. Those of you that are enrolling, you don't need to do that. Okay. Those of you that are enrolling, we give you access to everything on the site. And I say everything on the site, like everything. So here's the actual chat room in here. Okay. I should refresh over there. But here again is the chat room. Oh, it's Tony Rago's time right now. Tony is live. Okay. The start guide, all the different classes in here. Okay, it's all available to you. And again, you can hop in here. Listen, there's still what, hour and a half left in the trading day. Okay, so with that, you can come right into the chat room and check out. I mean, listening to Tony Rago sounds like a bit of a foreign language initially, but you'll get it. I mean, this is an individual that just trades intraday all throughout the course of the day. So again, I'm going to answer some questions for you guys as you are enrolling and make sure that everybody is up to speed and gets your questions answered. That's critically important to me. What our members are saying, this comes from Jeff. It says, I wanted to drop you a quick email. I think the class is wonderful. I've been stretched each session, but not beyond my capability. After each session, I watch the recording and do the homework. I feel each week my knowledge of options trading is growing steadily and rapidly. Obviously, I can't speak for my classmates, but it's going very well for me. Thanks for the great instruction from Jeff. This one comes from Todd Summerall. It's a little bit of an older email, but the reason I threw this in here is it says, don't know if you remember me, but I emailed you a few weeks ago and you told me my delta was positive a couple thou or more. Basically, this guy was massively long the marketplace, huge position size. And I told him in the email, he says, well, you told me smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. Okay. When I say smash it, I told them that you had to get out of these positions. If you don't get out of these positions, you're going to lose half your life savings. It says, for your information, before Theo, I had no clue about portfolio delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this as you want. And I do use it. And I use this one specifically because I want you guys to understand, okay? We here at TheoTrade, we don't shy away from emails. We go head on. Most of us have held every brokerage license imaginable, okay? Again, I worked in the executive team of both Thinkorswim and TD Ameritrade. We know how to answer questions, okay? We have a couple of individuals also here at TheoTrade that worked on the trade desks of major brokerage firms. We know how to answer your questions. I've had and held a Series 3, which is for futures. Series 4 is an option principal. Series 7, which is just what? Your regular broker-dealer license. I've held a Series 24, which is a principal broker-dealer. And I held the mighty 66, which is a 63 and a 65 combined, because I used to manage over $300 million for Thinkorswim. So a little background on that. Let me answer some of your questions. These are general questions. Everybody always says, what do you need to get started? You need a laptop and internet connection. In fact, tell you what, right now, you only need a mobile device. Okay. I would say you probably need like an iPad or like an Android. You don't even need like a good device out there anymore. We have everything that you're going to need to get started, from novice to the most extreme traders. Number two, this is not a membership. We do not auto renew or auto bill. I keep saying that because it's a bothersome area for people. They don't want to be hit with a $300 charge every 3 months. We don't do that. It's not a membership. Okay. Is everybody clear on that? It is not a membership. Okay. It is not a membership. Oh, I like that. What does a Delta portfolio mean? Okay. What is a delta portfolio? We can actually aggregate the risk of the entire portfolio into one number. That's what portfolio delta happens to be. Number 3, we provide weekly updates, Theo Theta. This is the portfolio that we sell options. It's a 12-minute video each Friday, and it comes out and it tells you exactly what we do. So number 4, we archive everything. Everything. Every word spoken since 2016 is archived. Okay. Just to give, for those of you that are tech geeks, okay, right now, 6,000 people, we are going to use this year 1.2 petabytes of streaming data. 1.2 petabytes of streaming data. I watch that all the time because you don't realize how many millions of minutes of data that happens to be. We archive everything. What's cool is you can actually, you can watch the archive at any speed. You can watch the archives on your mobile device. Okay, you can go back, 5 years in time. And you, again, literally like 5 years in time, you can go back in time and actually watch everything we've done for like the last 5 years. By the way, I'm watching some of the questions come up here. Also, please note this, because somebody just asked a moment ago, they said, how will I know if I was one of the 30 people that enrolled? I will gladly read off your name, okay, as it actually populates into my system here. Okay, when I say I'll read off your name, I'll read off your first name, your last initial, okay? If you're one of the individuals, the first 30 people that enrolled today, okay, are qualified for the riskless deal. And the riskless deal is basically, it's a 90-day money back guarantee. All right. Where did I leave off over here? Oh, number 5, we provide you access to TheoTrade mobile. I like it. Okay. I actually like looking through this as well. Like, it doesn't really do it justice on here to show you my phone, but we actually have a complete TheoTrade app. Okay. And logged in, you can then access everything. But the cool thing is you can kind of save classes in here, but there's also, you can change the speed at which we do playback. So I sound like a chipmunk at 2 times the speed, but you can do that. And it's cool because you can download the class onto your device, and it's like Netflix. So it'll download it and it'll hold it in there as long as you're a member. Okay. But if you're on a plane, you don't have to stream Wi-Fi or anything like that. You just download it and stream it. A lot of people are actually, those that are commuting and so forth, a lot of people were using it for the commutes. What's really crazy is the number of people now that they're streaming, but we can tell like they're streaming from home. Like nobody leaves their house anymore. It's crazy. Anyway, that's not good. We have a mobile device. Add your cell phone number when you're enrolling, okay, and receive those text messages. By the way, if you're out of the US, so I am currently in Payson, Arizona. Payson, Arizona, we're up in the mountains. Okay, it's a really small town up in the mountains up here. We love it. It's a cool place to be like around the Christmas and the holidays. But I live in the Virgin Islands now. The US Virgin Islands, we do get text messages there, but on an island right next to us, they don't get text messages, but you can use push notifications. So if you're out of the United States, we can still get to you. We can use push notifications, and the push notifications work through the mobile device. So figured I'd mention that over there. By the way, it's theotrade.com/skew. Next set of questions. You can email us anytime. You'll get a response within 24 hours. Most of the time, okay, I just throw the 24 hours in there as a disclaimer. Most of the time, we respond to you, okay, within a few hours. But the reason I throw that in there is some people will email us, and I'm serious, okay, and I'm begging you here. Don't email me on a Friday with 1 hour to go to the closing bell and say, I got a problem. That's this Friday's expiration. Because there's one thing you'll get to know about me. I trade. I answer emails before the market opens or after the market closes. During the trading day, I usually sit here and trade. I am in the chat room and I broadcast for an hour plus every single day. This is never the last time you're going to hear from me. I broadcast every single day, okay, at minimum an hour. And days that we're rocking in the marketplace, I'll stay on for 3 hours. I don't care. I'll push people off the schedule for that because if I'm into it, we're going to trade. And listen, you should know that on volatile days, it's funny because on an average day, we'll have like 2,000 people logged onto the chat room live. On a volatile day, there'd be 3,000-4,000 people in there at one time. It's crazy. It's great. I like it. you'll gain access to everything we've done over the last 5 years, actually the last 6 years now, classes, coaching sessions, live trading, everything. All archives are searchable. We have like a little like Google index built into there. So you can actually scan through everything. Everything's searchable. Number 9, variations trades could be done in an IRA, right? Retirement account with as little as $2,000. If you want to sell premium, it's $5,000 in the IRA, okay? At TheoTrade, we can help you get approved for options trading at several major broker dealers. There are certain broker dealers that we definitely suggest you use over other ones. Okay, listen, I spent 15 years of my life at Thinkorswim and TD Ameritrade, but right now they're not the hottest hand in the broker dealer business. Tastyworks is the up and coming. The next decade, it's going to be all Tastyworks. And people were asking that question as well. Remember, there's 30 riskless spots available. Get results, take action, enroll for TheoTrade. By the way, I'm going to read off the first batch of names that's coming through here. Okay, when I say batch of names, this is of the first individuals that are now enrolled for the riskless trade, and I'll just read off a couple of names over here. It's Richard H. from Virginia, David F. from Arizona, Jazz M. from Canada, Christy from Florida, Carrie L. from California, Michael D. from Arizona, Pat M. from Florida, Michael G. from Rhode Island, David S. from Illinois, Jeannie K. from Canada, Marie C. from Wisconsin, John R. from Nevada, and Anderson W. from Ohio. That's just the first batch of names that came through. It takes about 5 to 7 minutes before I can see your name populate into the system. All right, I'm going to answer now some of your specific questions. I'll also I'll throw up the page here. Again, it's theotrade.com/skew, because there's a few more people that were asking that. I think that's actually in our room as well. Okay. Okay, so a few of the individual questions over here. Oh, somebody said, this is a great one. How much time lag do we have before to act on any of the trade ideas, any of the trade notifications? So you're busy throughout the course of a day. Like, how much time before, you really need to execute into a trade? Okay, they're sometimes completely hands off. I would say you have a full 24-hour window to get in to most of the trades that we do. Selling premium, we're selling way out of the money options. They don't move very much, meaning that you're selling options that don't move very much as the market moves. So you could be a few pennies off. It's actually pretty hands off. Not to get me wrong though, we have trades that we do during the trading session. Like, I'll go in and out on the same day. Those trades, obviously, you'd want to watch a little bit more, but for the premium selling, really, really hands off. Okay. Oh, this one comes from William. William, you're going to love the answer to this. Since one cannot sell naked options in an IRA, will this program still work? Actually, that is completely incorrect now. That's the rule they changed. You absolutely can sell options naked now in an IRA. And people go, my brokerage firm doesn't do that. No, they probably don't. But there are brokerage firms now that do. And it's one of the reasons that so many of us are like, wake up a little bit, because things have changed in the last 2 years and we're still left in the fog. Like, the Robin Hoods and the TD Ameritrades, like TD Ameritrade now is owned by Charles Schwab. It's run by like attorneys. They're not going to let you do certain trades. Nevertheless, you can absolutely now sell naked options in the IRA. And I will reiterate one more time. Okay, people, this trade, this is my IRA. Okay, and you go, well, how do you know it's your IRA? Oh, it's a retirement account. In fact, when you actually pull it up, oh man, they won't let me pull my margin up right now. Okay, when I pull it up, you can actually see my risk analysis, my net lick, everything in here. Okay, but this is, all right. Oh, this is the trade. This is the IRA right here. Okay, so you can absolutely do this now inside of a retirement account. It's kind of cool. It's a brave new world now. All right. Yeah, some great questions. Okay. All right, we got that one. Can I use this traditional IRA account? So in a traditional IRA account, got to have more than $5,000 for them to allow you to sell premium the way that we sell it. It's $5,000 minimum. Okay, on that one. Yeah, by the way, we'll help you get a broker. Cindy asked about a broker that lets you trade naked calls in here. And yeah, we'll give you the exact underlyings. One of the things we do actually in the course is we give you specific underlyings. Okay. And it's basically the place you're going to want to trade. And it's the way we also teach you to circumnavigate day trading margin restrictions. I can't stand the regulations, day trading margin rules, like what they call a pattern day trader. We teach you to get around that too. That's not a problem at all. You shoot me an email, we'll teach you how to do that. Um, you know what? I like this one. I'm scared of losing money. Okay. From prior crashes. Okay. So I'm going to tell you this, the ultimate trades, a critical aspect of the entire course is the risk mitigation side of it. And if you're going to take any losses, by the way, everybody in every single trading genre, sooner or later, we all have to take some loss. Okay. You saw, like, as I was going through trades, everybody does. And you should know that right now. Like, I don't mind, let's bring this to the table already. It's taking large losses that we have to avoid. Okay. We teach you in the Ultima class to use a risk array, which can actually show you precisely with, like, let's say a 20% move lower in the market, 20%, that's an outright crash. The market crashes by 20%. We can get down, okay, to a few dollars and cents of what you're going to make or lose. And it's essential that we understand that particular portion of the class, because once you know what's at stake, then you come in and learn to mitigate the exposure of that. When I say mitigate the exposure, you'll learn how to use certain hedges, okay? And I hope that that will make it a little bit clear. So to say that you're not going to have any losses, no, everybody's going to take a little bit of hit. You saw my trades. I took a couple of hits here and there. But the one aspect that I want to resonate with you, okay, and I really wanted to resonate with you, we'll get it down to a few dollars and cents of exactly what your risk is. Somebody said, I'm unable to watch the market while I'm at a day job. Yes, you can actually, you will eventually have to send trades at some point during the day, but you can use GTC, which is good till canceled, to buy them back for your gains. We actually teach that in the class. Will this allow me to scale up to generate full-time income? Oh yeah. So again, one of the things that we do is when you become a little bit more astute in doing this, this is a full-blown inventory here, an inventory that this is enough to start to make some serious income off of, and that's obviously the idea. And this is only one small portfolio. Obviously, I've got other portfolios over here at Thinkorswim, and I do actually toggle back and forth throughout both platforms. Okay. What's actually great? Will Ultima help me become a more consistent trader? And the answer is, you're not going to get into the one step forward, two steps back anymore. That's exactly what we try to avoid. The consistency is the most critical aspect in this class. Okay. Somebody said, I'm just starting out and having a small cash account. I buy weekly options, 4 days to expiration. Okay. That is some really, really high risk stuff. Okay. Stops are placed. We don't use that here. What you're going to find out is real traders are not using stop orders. Okay. And people ask about stop orders all the time. You're not going to hear that kind of stuff here at TheoTrade. You realize that the New York Stock Exchange banned stop orders now almost a decade ago. Your brokerage firm still offers it because they don't give a crap. Okay. But the major exchanges got rid of stop orders because it's not a good form of risk mitigation. Because the problem with a stop order is they stop you out and they work. By the way, a few more names coming in here. Robert G from Oklahoma, Joe W from Canada, Steve P from California, Delbert W from Georgia, David N from Tennessee. I just wanted to read off a few more names. Those are individuals that have enrolled, and thank you, obviously, for enrolled for the riskless trade. And again, we're just pretty close to 30 people in here right now. I'm just trying to add this up. It's about six more spots on the initial 30. And again, I'm about six or 7 minutes delayed in seeing what comes through. I like this one too. I'm new to options. How can I get up to speed? So it sounds like a foreign language. Yeah, the foreign language will become very, very clear. Again, I speak geek only because I grew up around this. The options 101, 201, 301, you're going to go through those 3 levels of classes. You'll be right up to speed. Okay. It does take a little bit of time. Like, it's not like a new language, but there is a little bit of lingo to this. You know, when I talk about like rip your face off rallies, people like have no idea what that means. This is a rip your face off rally today. That's what it means. 100-point move up in the S&P is a big move. Okay. All right. I think we got most of them. Okay. I like it. I like it. I think we got almost all of these questions covered in here. And again, if I miss reading off your name, as I said, it takes me a few minutes. I'll sit here and we'll answer some of the questions by typing in online. I want to thank each and every one of you. I've gone way over in time today, but I want to thank each and every one of you for attending live today and streaming up here to Pace in Arizona. Thanks everybody. And if you need anything, again, hit us, support at TheoTrade.com. Again, support at TheoTrade.com. We can answer any of your trade related questions. We can answer anything TheoTrade related. We're here to help you guys as much as possible along the way. Thanks everybody and have a wonderful afternoon. Bye-bye.